that we look at it in that perspective, that mobile money accounts are increasing, and if the banks are not going to find a way to complement with the existing development, you are likely to be left behind. Because mobile banks, mobile money, mobile wallets are now also integrating with banks. So the banks that fails to integrate with mobile money, in other words, you are to suffer the consequences in future. This is the message that I wanted to pass here on the account ownership issue. The other issue is on saving moment. Again, even that the accounts that are opened mostly or to a larger, at a huge rate, it is on mobile money, mobile accounts. Then even saving, people are saving more on mobile money compared to banks. So it is very important that we take note of this development. If you look at sub-Saharan Africa, according to this report, people who are saving in mobile money are quite many, and irrespective that they don't earn anything, any interest or any return, compared to those who are saving in a bank, even though they are given interest. So people who save formally, okay, and receive interest are still minimal compared to people who save formally and do not receive any interest. So this is again a message that we need to take it seriously, that we need to create saving products that are convenient to mobile accounts holders. And this is also another insight here, that we see people are saving more, okay, on their mobile money compared to a bank. If you look at East Africa, it is quite clear, the charts which are of pink and so on, they are quite bigger compared to the charts which are of blue and so on, banking and similar financial institutions. So we need to really do something, especially for the banks, if we are to retain our businesses, but also be able to serve the public well. In terms of borrowing, again, the data shows that people are borrowing also from or through mobile money. As you can see here, the case of Kenya and Uganda, you can see that though people largely borrow through family and friends and so on, okay, but we see a growth in terms of borrowed using mobile money accounts only. So for example, in Kenya, between 2021 and 2024, you can see that this graph of those who borrowed formally using mobile money has increased compared to those who have been borrowing using the banks. So it is important that we are able to create products, financing products that can feature well within the mobile banking, mobile phone landscape. So this is a very important insights that we need to consider. And more interestingly, those who borrow through mobile money, particularly in sub-Saharan Africa, are borrowing for purpose of business. Okay, something that in the past we thought that, you know, we cannot finance through mobile money because people want cash, you know, for purpose of things that are personal. But the data shows that most of the people in sub-Saharan Africa, when they borrow through mobile money or other, they borrow in order to finance their businesses. Those were my insights for today's session. Now, I would like to take you through what we have for today. And I have already given out the opening remarks. And now what comes is our guest speaker, we will talk for around 30 minutes, who is none other Fahad Hamid. But later on, after the guest speaker, we shall have different speakers talking about the same topic, but from their own perspectives. Someone would wonder that the same topic, but different speakers. Yes, we have designed it in such a way because we believe different presenters will share their own perspectives. And it is good that we benefit from this perspective, these experiences from their own institutions or from their own analyses and so on. So that is the program. After that, we shall have Professor Ahsin Lahsasna, who will come in and talk about the Maqasid al-Sharia. And also there will be Mufti Ahmed Suleiman, who will come and talk about empowering sub-Saharan African economy through ethical finance, so on. And finally, we shall have Mr. Abdullahi Adan, who will come and talk about Islamic investment banking. I would like to apologize here that this program that you see is a little bit, it has been changed in terms of timing. As you know, we haven't started at 8:30, we started at around 9:20. So there is a slight change in terms of this timing. So our next speaker, who is the guest speaker, is to start as 9:45, which is almost 4 minutes from now. That being said, I will now engage with our current speaker in order to set him for presentation, if he has a presentation, to allow him to upload, and then I will take the time to invite him. Mr. Fahad, I hope you have joined. I will now allow you to share.
I don't have any presentation. I will just speak on my notes.
All right, then please. All right, please let me introduce you briefly and then let the floor to you. So we are honored here to have our brother, Mr. Fahad Hamid, who is currently the managing director of People's Bank of Zanzibar. But he has served in different capacities in different organizations. The most recent one were Amana Bank, where he served as the chief finance officer for a number of years. And then also he served with USAID firm, as you know, is a charitable philanthropy governmental organization. And currently he serves as an MD of People's Bank of Zanzibar, which is one of the bank that has an Islamic window, which has also been offering these services for many years now. So we are very honored to have you, Mr. Fahad, for you to give us your remarks as a guest speaker to open up this forum for us. Most welcome.
Thank you. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي أما بعد. السلام عليكم ورحمة الله وبركاته. I hope you can hear me well.
Yes, very well. Can hear you and see you very well.
Thank you very much, Brother Khalfan, for the introductory presentation. It was very insightful. And I hope with my brief notes, what I'm going to talk about is going to relate to what you have just presented to us. It is my pleasure to be here on the 3rd East Africa Islamic Banking Forum. It's unfortunate I was not there for the first two, but inshallah, I'll try my best to be there for the following forum. As presented, this forum is focused on empowering East Africa's economy through Islamic finance. And I have prepared my brief notes. and I will try to spend less than the 30 minutes I've been given, so as also to save time. First of all, I would like to extend my gratitude to Brother Khalfan and the Abrar team for inviting me to be the guest speaker for this forum. And also, I would like to congratulate them for this initiative. And I think it's very important one. They've done many initiatives, and we are here to support them with this initiative. And inshallah, it will grow bigger and bigger as we go along. To start with, I would just like to give a brief overview of the Islamic finance ecosystem in Tanzania. Some of you may not know. In terms of Islamic banking, we started in 2008. And actually, it was the first Islamic window that came into Tanzania from KCB, Kenya. And our colleagues in Kenya, they have been the pioneers of Islamic banking, as well as Takaful. They've started long ago compared to us in Tanzania. But over the recent years, Tanzania has grown tremendously in the Islamic finance space. So as of currently, we have around, if you take one fully fledged Islamic bank and 5, I would say, windows, including Iman, I Trust. So we have around 6 institutions that offer Islamic banking services. And us as PBZ, we may qualify a window, but we would like to call ourselves division, as our Islamic banking division actually, is independent and it works on its own. But inshallah, we have ambitions to have a subsidiary soon, inshallah, in the next 5 years. As of currently as well, in terms of the Takaful space, we have 2 Takaful operators, one based in Zanzibar and one in the mainland. They've just started. Takaful was just recently approved in the country. So alhamdulillah, as of now, we have 2 operators that are already operating. And in the space of Sukuk issuances, I think we are leading in East Africa. We are the first pioneers of Sukuk in East Africa. I believe so, if I'm not mistaken. And so far, we have more than 10 issuances that we have done in the country, ranging from issuances by financial institutions such as Iman, KCB, and recently our colleagues of CRDB issued a Sukuk that was tremendously oversubscribed. And we have other private Sukuks that were issued that we have been engaged with. So on that space, we have grown tremendously. I think we are leading in East Africa. And of recently in the country, we have introduced Islamic social services scheme, particularly in the Zanzibar side, and I'll talk more about it later on. And we also have other players in the Islamic finance ecosystem. We have the Islamic microfinance institutions. We have Awqaf trusts, Takaful brokers, Sukuk advisors, etc. So as you can see, the ecosystem in Tanzania has been growing tremendously. And on all those fronts, there have been a lot of movement in the last, decade, I would say. In particular, now focusing in Zanzibar, there has also been a tremendous growth in the last 5 years. And this is credit goes to our president, His Excellent President Hussein Ali Mwinyi, who has the ambition and vision to see Zanzibar become the Islamic hub for Eastern and Central Africa. In that way, going through different changes and transformations in trying to make Zanzibar be the Islamic hub, Islamic finance hub for East Africa. Of course, sorry. The movements in Islamic finance institutions and similar like in Zanzibar started long ago. But I would say in the 2000s is where things started, getting formalized. We started our first, we had establishment of Waqf and Trust Commission in 2007, which started, managing properties, mostly Awqaf properties, but now, up to Cash Waqf is also being managed. But we, as I said earlier, PBZ, the Islamic Banking Division, started in 2011. So 14 years ago, we started the Islamic banking in Zanzibar. As well, as I said earlier, Takaful, we had the first Zanzibar Takaful operator, actually the first in the country, which is called ZIC Takaful. That was established in 2022. And on the Sukuk front, we had the largest, early this year, the largest government-issued first quasi-sovereign Sukuk in the whole of East and Central Africa that was issued by the government of Zanzibar. And the size of this Sukuk is closer to $450 million. Of course, the first tranche that was around $150 million was over and oversubscribed. And I'm glad to say that the first tranche of profits were just paid this week. So this is the biggest Sukuk that has been issued in the country. Again, as I said earlier, we just launched last week the Islamic Social Services Scheme under our local Social Services Fund. So this is another milestone that Zanzibar has achieved to be able to complement the Islamic finance ecosystem. Again, as we speak right now, we are in the preparations of establishing our own stock exchange, Zanzibar Stock Exchange. And as of now, what we are aiming and what we are pushing for is to have Sharia-compliant capital market instruments. So all of these currently are being taken into consideration, and hopefully, inshallah, we'll have our own stock exchange that is Sharia compliant. That is overall in Zanzibar what is happening. And if I would, if you allow me to focus on my bank, PBZ Bank, PBZ Bank, as Brother Khalfan introduced, we started our Islamic Banking Division, or PBZ Ikhlas, back in 2011, as I said. But we are the oldest bank in the country with almost closer to 60 years. We'll be 60 years by June next year. And currently, we are spread all over the country, I mean Zanzibar and mainland, with over 45 branches and service centers. And in terms of size, we are the fifth largest bank with more than $100 billion of assets. And we hold the largest Islamic banking portfolio in Tanzania. We currently have around 250,000 customers, our accounts, Islamic accounts, and with more than $300 million in deposits. Our financing range is around $100 million. And we have invested in Sukuk almost $90 million. I will explain more. As you can see, there is quite a mismatch between the deposits and financing, as explained earlier by Brother Khalfan here. Profitability, we are shy of $5 million, which is not much as we would have loved under Islamic banking, but at least, alhamdulillah, we are making something. So I'll come back to what I said in the mismatch in the portfolio mix. So you can see with the deposits of 300 million, we have only 100 million that has gone to financing, only a third, 1/3. And the others, we had to put them in Sukuk investments. And this has been the most challenging part as we navigate through the Islamic banking journey. And in my own view, I would say the challenge has been mainly in the understanding or I would say education, learning, awareness, especially on the financing side, financing products and concepts. As Brother Khalfan explained there, the appetite on the financing side, there's a bit of a challenge there. And I would say again, if you look, dwelling on the challenges right now, we have had issues on legal acceptability, especially in our country, given how diverse it is and how mixed it is. We have had challenges, the readiness of the government to have in place, acts and regulations. For this, I would commend our colleagues in Uganda. Uganda, they have done quite a lot in terms of the legal aspects. I understand they have their own Islamic Banking Act as well as regulations. They've also done, changes in the Insurance Act. It now incorporates, elements of takaful as well as guidelines. And I understand Uganda is the only country in East Africa that has got reporting standards for Islamic banking as well as takaful that were issued by the Institute of Certified Public Accountants of Uganda. And last week, I was in Uganda. We were attending an East African Capital Markets Conference, and we were updated that they are on the verge of developing the Sukuk regulations. Though their market in terms of on the ground has not been vibrant as us, they have, they are on the upper hand in terms of, the legal jurisdictions and other formalities that have been put in place. In Tanzania, we are still yet to have Islamic banking regulations. We have been pushing hard for years. We have a draft that is already in place. Just the approval has been an issue. Again, alhamdulillah, we'll continue to push. But again, we have guidelines on sukuk, alhamdulillah, and takaful as well. But these are guidelines, not regulations. So we will be continuing to push for regulations. But what I'm saying is, I think in terms of the readiness of governments to have the legal groundwork for Islamic finance is critical. And in East Africa, we need to push for that. Lastly, I would say, in my opinion, with what we have been, implementing, I feel like we need to do more collaboration and support. We need more support amongst financial institutions, Islamic financial institutions, be it in Tanzania, be it in East Africa front. I think we need to have a collaborative engagement approach in tackling some of these challenges. Right now, I feel like we have been operating in silos. We need to do more syndications. We need to do to have a collective voice when it comes to pushing some of these initiatives. As we can see, we need to continue as well to educate the public. We need to continue to sponsor awareness programs, support forums like this, as well as in investing in education, in Islamic finance education. We need to invest into our boards, our leadership, senior management. We need to invest into our Sharia scholars. We need to invest into our staff, regulators, stakeholders, as well as customers. Because at the end of the day, if we don't invest in educating our customers, this is the outcome, the portfolio mismatch that we are seeing in terms of the uptake, the appetite for financing. And as I said earlier, I think we need to push for legal reforms. It is doable. Zanzibar has been on the forefront, trying to legalize most of these initiatives, and inshallah, we'll be there. And with those concluding brief remarks, I would like to end there. Again, Brother Khalfan, thank you very much for inviting me. And I hope and I wish you a successful forum, and I declare the forum open. Thank you.
Thank you so much, Mr. Fahad Hamid, for very wonderful remarks and for your insights on the development of Islamic finance in Tanzania, what we have achieved, what we need to do more, and so on. I hope that the message is very well clear, and is now upon us to touch on these areas that requires push and do a coordinated effort to move forward. I thank you so much for your remarks. Now, to proceed, what comes next as per our program before you is going to be some insights from industry leaders. And we shall start with Mrs. Saada Muhammad. I hope, Mrs. Saada Muhammad, you can hear me?
Yes, I can hear you, Sheikh Alfan. Can you hear me loud
Do
and
you have
clear?
a presentation? Yes, you have a presentation so that I can allow you, or you just want to make your remarks?
I have my remarks.
Not a slide, not a presentation.
No. I'll just
All
talk
right.
through.
All right. Thank you so much. So now let me take this opportunity to invite Mrs. Saada Muhammad. She is head of business of one of the pioneer banks in East African market, and this is Gulf African Bank, which is a full-fledged bank based in Kenya. So I take this opportunity to invite Madam Saada Muhammad to share your thoughts, particularly on the topic of innovation, transformation, and empowerment initiatives that have been done, particularly by Gulf African Bank, and perhaps and broadly what needs to be done next. You're most welcome.
Shukran, Sheikh Alfan. Assalamu alaikum, and thank you for considering us for this forum. This is the third Islamic Banking Virtual Forum about empowering East Africa's economy through ethical and inclusive Islamic finance. I think this comes at a very important time, even when us guys as the East African country are looking for a financial system that not only drives growth, but also upholds fairness, ethics, and inclusivity. In line with what even our guest speaker has talked about, Fahad Hamid, in terms of this is an area that requires us to really come together collaboratively and see how can we become more innovative, even in this era where digital transformation is rising. And it will be good for us to appreciate what is happening also in the emerging markets and challenge ourselves even as we go through this forum. How can we transform our institutions? How can we transform the Islamic banking arena by borrowing from some of the things that are happening at global level and bring them back to our region, bring them back to our country, bring them back home to the places of institutions, or in the various areas that we want to impact on. So for us, Gulf African Bank, as Khalfan has said, we are among the pioneers of Islamic banking. We've opened our doors from 2008, and alhamdulillah, now we are 17 years into the market. And I must say it has been a journey of demystifying even what is Islamic banking. And it's still a journey because up to today, we are still faced with that knowledge gap that exists in the market that we need to continue scaling up, and better collaboration amongst the scholars, the institutions, I believe will propel us to do that. So having been now in the market for the last 17 years, alhamdulillah, we have now 15 branches. We recently opened a digital branch in Mombasa, that's Pwani area, in Nyali. And this is just in line with the innovation of how do we still serve the needs of our customers in a more digital, more convenient way and reach a bigger market for our customers, okay? And in this era where we are seeking of penetrating more markets, we really need to think even as Islamic institutions. Halfan has given us statistics in terms of a lot of money is going through the mobile operators. They might be lack of digital savings products in Kenya, or a few players are playing there. So is that an area that we would want to consider even as a region? And over the years, alhamdulillah, in terms of the Islamic finance in East Africa, we have seen across Kenya, Uganda, Zanzibar, our guest speaker has given us a very good trajectory of what's happening there. And now we are seeing even Ethiopia growing interest in Sharia compliant banking. And the support from the regulator has been there, but it's still something that we need to work on. If I was asked today, is we really need to anchor that and building into a financial system that is both ethical and inclusive, and bring in those regulatory approvals, all the Islamic banks, all the windows that we have in the market, to be able to speak with that one voice and build the vision that we so aspire. So with us going through this journey and seeing areas of collaboration on what we can be able to do, I believe digital is an area that we cannot avoid to play as Islamic banks or play in the Islamic finance. Today, we are talking about a population in Kenya of Muslims of close to above 40 million and above that are in this country, and 10% of them are Muslims. So how do we, Muslims, how do we get them on board? And it's through this that even back at home here at Gulf African Bank, we have been able to come up with innovative product, innovative channels. For example, think of a digital banking channel. Right now, we have upgraded our banking platforms. We have the Gab Express right now that allows you to transact at the point of your fingertips, that allows you to query for any service, be it where you are, whether you are not near any of our branches, you are able to do that. So how do we leverage more of technology to get to this reach of the population? And recently, I know there was a FinAccess report that in Kenya has also been circulated. And if you look at the bankable population, the unbankable population that is not yet tapped into, the potential is quite high. So how do we think of building into that system, leveraging on technology and trying to penetrate those particular markets and offer them the solutions that they have? And if we are able to do that as Islamic banking, I believe we will be able to address the needs and people that are looking for an ethical and exclusive banking. Now, today, as Gulf African Bank, we have identified that there is a need to have that inclusivity, that unbanked population. And this calls, and I'd like to share our experience, this calls for development of products that take care of this segment. For example, when we talk about women, how are we addressing the women that are unbanked or that would love to be banked, but they are unable to access maybe facilities within the banking system because they do not have the security? So for us at Gulf African Bank, alhamdulillah, we've been able over the years to develop a product dedicated for women where they can access financing, where they're able to build their businesses and transform them without stringent requirements of collateral. And this is what I will appeal to my other counterparts. We need to think as Islamic banks of innovative ways that we can help to tap this market that is that needs to be included in our ecosystem. Today, if you look at the youth, the Muslim youth even, or people that are growing now, and ask them, have you identified a good financial partner that will walk through the journey with you? So we need to think of such kind of partnership models, which we have as Gulf African Bank. It's a success story. And when you look at going into that particular segment, for us, it was more about how do we build the education for these women? How do we create the empowerment for these women? How do we give them the access to markets? How do you bring the markets closer to them? So we have been able to transform and continue building the value proposition for this segment. We now participate, and every year we give our women banking clientele a marketplace. Nowadays, we know most of the women businesses are being run digitally. They don't have shops. They don't have that physical presence. So we come in and create that marketplace, physical marketplace, where they get to network, they get to position their products. And alhamdulillah, over the years, we have seen these women build up their businesses, giving them collection solutions. We need to think of this particular business is not able to come to the bank every day. How do we give them an integrated solution? So we have been able to develop through our digital banking units, channels that allow us to bank these women. It's convenient for them. You give them also a little bit of education in terms of bookkeeping, governance, so that they're able to run a sustainable business. Now, when you come and look at the other front that is really emerging in the market is the issue of sustainable finance. And today we ask ourselves, what are we doing in that space as Islamic banks or institutions to grow in that? And this calls for us to develop, again, product development that converge with our principles. Of course, the principles of like Maqasid al-Sharia, where we preserve life, wealth, and the environment. So if we are able to come up with sustainable financing, at Gulf African Bank, we are able to give you financing for green products, green financing, let's say for solar. We have been able to embed that in some of the mortgage products that we are giving. And this only speaks and aligns us as Islamic banks to the global vision. And that's what I was saying. How do we borrow also globally what is happening in the market to be able to build that? So the journey has been quite transformational. And when we look at the East African market, I believe it's now becoming more and more credible, competitive, and we are having, for example, like in Kenya, 3 fully fledged Islamic banks. We also have Islamic windows from other financial institutions that are there. And with that, we really need to think of how can we, and I liked what Fahad Hamid said in terms of even looking at syndications. Are these things that we can be able to tap into each other and see how we can syndicate as the Islamic banks in the countries or with the windows to support even the projects that are of higher magnitude and be able to create that impact that we have. Then another space that I find that it's an emerging space. We've seen quite a bit of microfinances coming up also here in Kenya, fintechs that are coming up, and we really need to think of what are the integrated partnership models that we can have with them to be able to bring out that solution to these particular entities that are there. And this will enable us to just tap more into this market and just grow the market. So it's been a wonderful journey for us at Gulf African Bank. Like I said, alhamdulillah, we have been able now to grow our deposit base close to 38 billion. Asset book now, we are almost hitting the 50 billion mark. Alhamdulillah, it's also been profitable for us with the collaboration with our partners. But that doesn't come easy, and there's still a lot of challenges that need to be addressed. And I believe that if we collaborate as Islamic institutions, bring the governance harmonization across the region. Today, the liquidity management tools that are available are limited. If you talk to our treasury teams, even across the other Islamic banks, there's still a limitation on that. And it's an area that I believe if we want to grow it, and make a difference in where we are, we really need to focus on more and more collaboration. And thanks to Khalfan and Abrar Solutions for bringing this kind of forums, because they help us to just see that we need each other to grow this particular space of Islamic banking. Again, the issue of talent and the education programs is one challenge that we are facing even today in the market, and there is need for us to develop this for the next generation in Islamic finance. So if I'm to give a parting shot to all of us, and myself included, is we should not see Islamic finance as just an alternative system, but it is a value-based model for building a fair, inclusive, and resilient economy. Khalfan has just given us data from what is happening across the global markets and the successes that are there. I see no reason why East African does not stand that chance and threshold of transformation. We need to continue to innovate, transform, empower, of course, guided by the ethics of our Sharia, so that we're able to build an economic future that no one is left behind. So my plea is, Khalfan, thank you for this, and let's continue working together with the regulators, the banks, the communities, to ensure that we create that promise of serving humanity through fairness, justice, and of course, shared prosperity. So shukran, and thank you, Khalfan. Over to you.
Yeah, thank you so much, Madam Sada, for your insights. It is quite remarkable what you have been doing over the years. And we know that a lot is in store that is coming on different aspects in order to address the needs of the wider market. I just want to applaud one of the initiatives, which I think you have mentioned, and it deserves such kind of recognition, is what you have mentioned in terms of bringing the home businesses to main streets by virtue of you organizing some events or things like that, which allows women businesses now to have a platform of coming out from their homes and come to the market in order to showcase their products and so on. This is very commendable, because we know it is costly for any of these small business by themselves to sponsor themselves to see such kind of events. But you are hiring the place, inviting the smaller businesses to come and showcase their products. This is really, really, really fascinating. So I encourage the heart to continue this, because starting is one thing, but sustaining it is also very, very crucial. And we have this tendency of sometimes losing this consistency. So I really applaud you, and I hope that these things that you have started, you will continue and maybe extend it to the youth businesses beyond women. It becomes now women and youth, irrespective of the gender. However, always a journey starts somewhere. So I really applaud you for that. Now,
thank you, Khalfan.
Yeah.
It's coming up in November, if you'll allow me, Khalfan.
Yes, please.
It's coming up in November. We held one last year also. Alhamdulillah, we've been also consistent in it. And we started off in Nairobi. Now we've scaled it up to the two major towns, Nairobi and Mombasa. We are having it again this year, sometime in November for the women. And Alhamdulillah, every year, if you look at the difference we have made to these particular women and where their businesses are, it's amazing. So I will request the market is bigger for all of us. It's something that we need to do to impact our ummah and the society as large also. Yeah, thank you, Khalfan.
Yeah, we look forward to it, and we hope that it will be a tremendous success year on and so on. Now, I would like to invite Mr. Rashid. Mr. Rashid, are you there?
Yes, Halfan, I am here.
Would
Salam
you
alaikum.
like, do you have a slide or you'll just share your insights?
I actually do have slide. Let me try to
Let me then stop mine and then allow you to share.
yeah. Thank
Then
you.
then I'll introduce you briefly.
Thank you.
Okay, you can now start to try to upload. Yes, it's coming. All right.
Yeah. Okay.
I think you can start seeing it. Yeah, it's full now screen. All right. Let me take this opportunity to first thank Brother Rashid for accepting to be here with us and to share your views on the topic of innovation, transformation, and empowerment. Mr. Rashid is a long-time banker. He had worked with different banks in Tanzania, and now he is the head of Islamic banking at CRDB, known as CRDB Al Baraka. Mr. Rashid, you have 15 minutes, so most welcome to share with us your insights.
Thank you so much, Brother Halfan. Bismillahir Rahmanir Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I hope everyone is good and healthy today, and we are grateful to have this day health and sound to be able to meet. But I also like to echo the others who came before me to congratulate and applaud Brother Khalfan for organizing this. I also missed the first two. This is the third one, and I'm glad and grateful that I've been given a chance to speak, to share my insights. So again, in line with what Brother Halfan have said, the topic we might find ourselves talking about the same items, but I'm sure within the presentation and the discussion, there are a few items that we are getting from one another. I've put together a presentation which is very simple. It's not very, it doesn't have so much detail, but I'll be talking through it, which can help us to gain a little bit of insights from my perspective, at least for today. So this is to do with Islamic finance and Islamic banking, Tanzania, East Africa, and slightly of a global overview. What is Islamic banking? I think we all know. We are all Islamic banking and finance practitioners, so I'm not going to dwell on this slide. I'll just move to the next one. I think the global snapshot, which even Reza Halfan and the rest have mentioned, is that the industry is growing, sitting at more than 6 trillion. Actually, not 2023. This is now 2025, and it's projected to go above 7.5 trillion by 2028. And as mentioned before, Islamic banking account for the majority at 72% of the total assets, followed by Sukuk 23, and the others, Islamic banking and finance, and the others for the remainder of the margin. But we are seeing recently a lot of growth of sustainable and green Sukuk issuances that are also aligned with Sharia. And Sharia banking or Sharia finance has been aligned a lot, or being linked to sustainable and green financing and Sukuk. So because of the drive that is going on in terms of green financing, I think we are also having a good chance, synergy, to be able to put through the growth for Islamic finance and banking, because it goes in parallel with sustainable and green finance. And I think key hubs have been mentioned before that are coming up, like the GCC, Malaysia, Indonesia, Pakistan, but also surprisingly, even one of the Western world, like UK, is coming up very strong. and it does have a lot of players in Islamic finance, a lot of initiatives, and they're actually very keen in becoming the hub for Islamic banking and finance for the Western world, at least. In Tanzania specific, we've seen a lot of regulatory evolution thanks to the players and those who have been in the industry and pushing forward. Even what Abra is doing right now is one of the initiatives that are very good in terms of trying to progress our sector in Tanzania. And for that reason, we've seen a lot of regulatory evolution, also thanks to our government and leadership, which they've been very flexible and cognizant of what is the demands, what are the demands in Tanzania in terms of banking, what are the demands in terms of Islamic finance. So we've had this flexible and conducive environment to allow us to progress. So we've seen our Financing Act being amended to accommodate Islamic banking. Even BOT is being empowered more and more. We are seeing a lot of trainings. The BOT, which is our central bank, lately they're going through a lot of training, they're engaging. Basically, they recognize the importance of Islamic banking. So that has been very good. And even when it comes to the tax regulations, the word interest in terms of tax treatment, they've expanded it to include profit or return, specifically to allow Islamic Bank to be able to operate more freely in the country. But because of this, we've seen Takaful regulations coming in. I think this has been mentioned, but also Sukuk guidelines came up, and this is why we are seeing a lot of Sukuks, even listed one public issuance Sukuks are also coming into rise in Tanzania. But very importantly is that our Bank of Tanzania is currently working, and I heard this from the Deputy Governor of Bank of Tanzania, as recent as a month or two ago, mentioning that BOT is working very closely to come up with tailored Islamic banking guidelines in Tanzania. This is a good milestone. Thanks to all of us, thanks to the industry players. This is why it's also being considered. And the aim really is to create fair and regulatory environment and financial inclusion for all in Tanzania. The Tanzania market landscape, I think this has been mentioned. Even our brother Fahad from PBZ mentioned a lot. We do have the fully fledged Islamic bank, which is Amana Bank, but we have a number of Islamic banking window. I mentioned more the Islamic bank. I didn't put other financial institutions like Iman Finance, which is not a bank, but a private financial institution. But we do have Islamic banking windows like Al Baraka, KCB Sahal, NBC Lariba, PBZ Ikhlas, which is a division as mentioned. We've had milestones when it comes to Sukuk, KCB Fursa Sukuk that came up in 2023. I think this was the first public issuance and listed Sukuk, Al Baraka Sukuk, and recently we've also, recently Al Baraka Sukuk, but we had Zanzibar Sukuk, which was the biggest. And Takaful launch, which has also been mentioned, ZIC Takaful. This also shows that the environment is becoming more and more conducive. And this is why we also see Takaful coming up. But very interesting is that we're also seeing more participation by institutional investors and even direct foreign investors. We are seeing a lot of, because of this development now, there's more foreign investors that are coming in just because we do have Islamic finance avenue as well. And for this, I can even expand a little bit more. When we issued our Al Baraka Sukuk, we have one or two foreign investors who poured in inflows of money in investing in this Sukuk, which means it's a positive aspect to our country overall, because we are having foreign direct investments coming in. And this slides here talks briefly about the market landscape in terms of the major players, in terms of banks. Now, it could be not accurate because this is the information I just gathered from talking to other stakeholders. So it might be not exactly accurate. If any number is not correct, I request to be excused. But this is the information I received. And you can see that in terms of total deposit, the industry deposits are sitting at 1.4 trillion right now. This is a very good development in Tanzania. This is equivalent to about $600 million. And the financing is about 844 billion in terms of banking, which is also close to $350 million, with a lot of customers that are coming through. Leaving from that, what is the impact to Tanzania? We've seen very, very good impact in terms of the development that is going on from Islamic finance and banking landscape. This has been promoting inclusion and ethical financing, but also it's been very supportive in terms of community. We've been able to support religious organizations, SME, corporates, local entrepreneurship, and microfinance. And I like to touch this a little bit when we talk about religious organizations. We have many religious organizations, and these organizations, for example, BAKWATA, which is a religious organization in Tanzania, for them, they're always depending on support like sponsorship and things like that. But this organization, at some point, they also have to have their own means of generating revenue. I think this is something that we all aspire so they can be more sustainable. And before Islamic banking and finance existence, these organizations, they couldn't even, they will only depend still on supporters, but now they can also get financial support using Islamic financing means and be able to develop themselves. And basically, like for us, Al Baraka Banking, we've supported these organizations, which means in principle, they're going to have a massive impact in the future where they can focus on delivering dawah and more spreading religious, Islamic beliefs properly without the worry of thinking, how are they going to be supported? Because now they'll have their own means of generating revenue. So this is something I really wanted to touch, but we've also been able to mobilize more savings, deepening capital markets, like now we have sukuks, and broadening funds infrastructure and direct institutions, foreign institution bringing in funds. East Africa regional, I know we have our brothers from Uganda and Kenya. They'll speak more on this. And the rest have also been mentioned, like Somalia being predominantly Islamic banking system. But I think we've all seen very good progress. Even in Uganda, Brother Khalfan said that they've entered the market. They have the regulations now. And I've seen recently they've signed with the Islamic Development Bank a deal of more than 800 million for infrastructure, which is via Sharia. For infrastructure development in their country. So this also speaks that East Africa is growing rapidly when it comes to Islamic banking. And we've seen a lot of development contribution within East Africa as well, which is enhancing financial inclusion for underserved communities, because now they have options, mobilizing capital via sukuk and infrastructure. We've heard even Kenya issuing sukuk, and I know maybe the speaker might touch more on this. But also, Madam Sada also mentioned with promotion of more sustainable and economic models of growth by expanding options for funding and financing and being able to allow everyone to take chance and into financial growth. But also the alignment with global ESGs and ethical financing, this allows Islamic finance to prosper more within the East Africa. But we're still having challenges that we know. We still need more regulations, deepening regulations that are still being done, more for the region, Tanzania as well. But for that, we also lack, we have limited Sharia compliant liquidity management tools. Most of the industry players right now, they don't have the flexibility or the options our other counterparts have in terms of short-term financing solutions within the organization. This is a limitation that we're still seeing, but awareness and skills gap in Sharia finance, this is still real. And this is not only within the practitioners or the institution. This gap also goes to the communities that we serve, which is it's a big gap that's actually limiting the growth and the penetration. But we're also seeing competition is still there. You know, all being said, we practitioners of Islamic finance, we always perceive competition as amongst ourselves because we are all offering Islamic finance. But the real competition, it's still with conventional banks. This is how I see it. Because, for example, when you talk about Tanzania, more than in the population of more than 60 million people, almost between 40 to 55% are Muslims. If this population of Muslim was, and especially the bankable population, if it was all going into Islamic banking, automatically the Islamic banking in Tanzania would have been on the upper hand than conventional banking. But still, we are holding, based on the statistics mentioned here, we're still very minor at 0.5%, I think Brother Khalfan has shared. And this is because we're still facing competition with our conventional counterparts. Most of our customers or potential customers, potential communities, they're still banking with conventional banking. So this is something that we need to unpack and see how we can be able to scale up and be able to bring these customers. And to me, I broke down potential customers in three. I know I didn't mention it in these slides, but there are those customers who are really, really focused on Sharia. If it's not Islamic finance or Sharia banking, they won't come. And those are our customers. But we also have others who they prefer Sharia banking, but because of lack of some kind of solution or competition, they just hope and they still bank with conventional banking and maybe touch with Islamic banks and financial solution slightly. And then there are those who really don't care. And these ones, they just go into conventional banking, but these are potential that could be, and these are the ones that are many. And we need to work on making sure we bring the right solutions for them to also come to embrace Islamic banking. We've had good success stories, and I know the previous speakers have mentioned on this, like the KCB Fursa Sukuk, which was the first public bond, Islamic bond, but again also Al Baraka Sukuk, which was multi-currency corporate sukuk. We've issued for foreign currency. There was a foreign currency part, and then there was also a local currency TZS part. This is the first of its kind. And to be fair here, I can speak more. We've had massive oversubscription. We wanted in T shillings, we wanted maximum 30 billion Tanzanian shillings, which is maybe equivalent to about $12 million. But we've went ahead and having oversubscription of up to 125 billion, more than 400%. And then when we come to the dollar tranche, which we put down, we wanted about $5 million, more than $32 million came in, 600% oversubscription. What does this say? The demand is there. And thanks to the previous ones who issued the sukuk, even the Zanzibar sovereign sukuk, this actually gave the momentum of what we're seeing now in terms of sukuk. because more customers, they are aware of what Sukuk is, and more people were willing now to subscribe. And that's why we're seeing this kind of subscription. But a very good story to say about Amana Bank. Amana Bank also have been able to continue to sustain growth. And this is a fully fledged Islamic bank. To be honest, all of us practitioners of Islamic banking, we wish to see all institutions having a good success, because the impact is massive. It speaks to all of us with our cause and what we want within our communities. So we wouldn't want any initiative when it comes to Islamic finance facing any challenges. I know Amana Bank some few years back, it had some challenges here and there.
Rashid, time is almost leaving us, so I've added you some 5 minutes, but also they're almost towards an end. So please,
I'll wrap up.
Wrap up, please. Yeah.
Thank you. So kudos to Amana Bank, doing very well, and this is creating more public confidence. Outlook 2025, I think we've mentioned, we are looking ahead to see a regulatory framework, more integration, regional markets, sovereign sukuk coming more and more, takaful expansion, more corporate sukuks we are expecting for them to come up. And this is my last slide, Brother Khalfan. The wish list, what we wish within the industry to be happening. We want our regulators to conclude the frameworks and reforms, but also we want to be able to explore more sukuk for diversification and impact investments, more projects to come up via sukuk initiatives. But we want our banks to be more innovative. You talked here regarding mobiles and wallets dominating the industry or coming up very quick, eating the cake. So banks need to be more innovative. This is something that we have to do. And us, for Islamic banks, we also have to be very clear on this and be able to participate before we are left. But also practitioners to make more efforts in expanding knowledge within our institution, but more importantly, awareness externally to our customers, so we can be able to grow the base and get the customer base of what is expected, what should be right, given the demographics of our communities. And for that, I would like to rest there. Thank you so much for listening to me. Thank you.
Thank you so much, Brother Rashid, for taking us through and sharing with us the insight on the topic. We are really glad that you have covered most of the things that has been happening. Perhaps I'll just add that in Tanzania, we have also witnessed the coming of the Islamic funds. And we have few in the market, which is quite empowering, because people used to struggle in terms of where to maybe invest collectively. As in the past, we had one which is very famous, government owned, but had no Islamic collective investment scheme. But now we have the likes of Alpha Capital, Halal Fund, Iman Fund, and so on. This is very empowering the people, and behind this collective investment scheme, we are aware that there are Islamic banks behind, because you play a role like custodial and others. So this is quite good. And also, what has really attracted attention in Tanzania compared to the regions here, Kenya and Uganda, I think the issue of sukuk. Sukuk has been now, like, the brand for Tanzania, Islamic finance landscape. Several issuances has been coming, and of course, they are led by banks, Islamic banks and Islamic windows. And of course, the government of Zanzibar. And these are all empowering. The people is transforming our financial ecosystem, and we really need to see this momentum continues. It should not be something that fade away at any time soon. It should be the momentum should continue, and we should see more of this kind of development year on year on. That being said, thank you so much for your time and sharing with us. Now I will proceed with another speaker. If you can close your slide, Mr. Rashid, so that we can let in another speaker. Mr. Tego, are you there?
Assalamu alaikum.
Wa alaikum salam wa rahmatullahi wa barakatuh. You have a slide to share, or you will just share your insights?
Yes, I have a brief slide, so I wish to share.
Please proceed. All right, just by way of introducing our third speaker on this topic to share his perspective on Islamic banking in East Africa, innovations, transformations, and empowerment. I'm glad to have Mr. Tego Wolasa to be with us. We're very appreciating your time, and we hope to gain from your presentation, your time today. So Mr. Wolasa is an experienced banker. He has worked for many years in the banking industry in different capacities and in different banks within Kenya. He has been also a trainer on Islamic banking and finance, and he has been doing very good work in Kenya in many subsectors, including promotion of Islamic SACCOs in Kenya, and he is also a Sharia board member of one of the SACCO in Kenya, which is the oldest, by the way. It's called the Takwa SACCO in Kenya. So we're glad to have him. He is currently the head of Islamic banking at Absa Bank. For those who remember, Absa La Riba was the first bank to introduce Islamic window in Kenya and in East Africa at large. And we are glad to have him, and we look forward to learn from his insights as to this topic at hand. Most welcome, Brother Tego.
Assalamu alaikum once more. Thank you, Brother Khalfan, for this opportunity. And I also wish to thank the speakers who came before us. I really gained a lot from the insight that you shared in the introduction, and also from the insight shared by all the three speakers that spoke before me. I'm also happy to reconnect. I know in this industry, we are always running after the numbers, we're running after so many things that we even forget to check on each other. So I'm really also happy to reconnect with the colleagues from the industry. Khalfan, yourself, like I've seen my sister Saada, inshallah. I've seen Rashid. We've worked with Rashid at one point, and also Saada. So it's also a very small industry. We are all siblings by the bond of Islam, and also by the virtue that we are doing da'wah to eradicate riba in this industry as a whole. So I'm happy to be here just to share a small insight on where we are. Of course, a lot has been said with regards to East Africa. I will talk a little about the general issues, and then also share what we are doing currently at Absa as a case study. Maybe there's one or two that I've already learned. I really gained a lot from the speakers that came before, and maybe I wish one or two things that I share will also be of benefit to the industry. That's how we move together. One of the key challenges, I know Brother Rashid talked about the challenges, Ada mentioned on it. One of the key challenges, for me, actually, the top challenge, it's not even about a regulatory framework, or the top challenge is collaboration. And that's why I was very happy when this forum was organized, because it is one of the baby steps we take towards collaboration and working together. And Rashid finished by a very powerful point that I really liked. He said our main competition is not the other Islamic bank, which is true. Our main competition is the conventional bank. To take an example of Kenya, for instance, as a country, Our population, of course, we always have this dispute on what is our real number, ranging between 12 to 15%. I would always like to take the safe average of 12%. With the population of 50 million people in this country, if we just take 12 million to 12% as the conservative percent of the Muslims, those are 6 million people. Then if you look at all the Islamic banks in Kenya, as at close of 2024, we had less than 700,000 accounts in all the Islamic banks. That's hardly 10%. So the other 90%, either they're unbanked or they're banking with conventional banks. So this can only be solved by coming together. That's our biggest competition. Of course, there are other challenges like ignorance. We are competing with ignorance, by the way, because it's not even a challenge. For me, I see it as a competitor, because it's one of also the biggest hindrance that we have, awareness gap. And in my many years of working in Islamic banking, Alhamdulillah, I worked in both. I worked from the first few years of my banking life. I worked in conventional banking. I got to see. Then for the rest of the last 13 years or so, I've been in Islamic banking. So the difference is like day and night in terms of transformation, in terms of a lot of things, ethics, a lot of things. But from my experience, whenever we go to talk to a customer to convince them to move from the ribawi system to Islamic banking, they don't pinpoint at the bank. They say there's nothing called Islamic banking. They don't say there's nothing called Islamic banking in Gulf or in Absala Riba. They don't say there's nothing called Islamic banking in Al Baraka, or they don't say there's nothing called Islamic banking in Premier or SIB. They generalize the Islamic banking as an industry. That can only be sorted by coming together as a team and removing that challenge. The biggest competition, like I said, is the conventional banking. That's why the Muslims are. We picked an example of one of the major, I won't mention by name, one of the town that is, we are sure that it's, if not 99, if not 100%, it's 99.9% Muslim. There are around 4 banks. We went through each bank and checked that the population of who are banking in Islamic banking in that particular town, vis-a-vis those who are banking in conventional, the percent is actually less than 10%, around 8%. And that's a Muslim majority town. So which brings us to the point. So as we think of this innovation in East Africa, then can we also think of stepping down from seeing the person standing next to you fighting riba alongside with you, the sister standing next to you fighting exploitation and gharar as a competition, and see the wider darkness that has surrounded the financial sector as the main challenge and the main competition that we need to remove. That's where we are. Today, if I look personally, if I look at the industry, the situation where from innovation is the main issue is that Islamic banking is not even, we shouldn't even be talking of innovation, in my view, Khalfan. We should be talking of catching up. We are not even at par with the industry. So the situation right now is there's no parity in the industry at all. Our counterparts have been there offering the Ujra cards of the credit cards. They've been there ahead of us in digital financial solutions. They are already utilizing a lot of solutions in fintech. But Islamic banking, we're still at the stage of asking whether it is Sharia compliant or not. We're still trapped at the door. We've not even gotten out of the house. So what we are doing right now in Islamic banking, and the sincere observation and experience is, we are at the mimicry stage. We can only move to the innovation stage by first of all catching up. Someone who's 15 kilometers ahead of you, you cannot compete with him unless you first catch up. So we are playing catch up currently. And like I said earlier, catch up cannot be done individually. There's some things you can do, yes. There's a difference between team of winners and a winning team. We want to become a winning team of Islamic bankers in East Africa. Not a team of winners. My brother Rashid wants to be number 1. It's my sister Saada, myself. That way we cannot help the industry. We can be meeting our targets, small targets here and there, and getting small bonus, but there's not much will happen. So for us to really catch up, first of all, to catch up, we need to step down and come together. And of course, that should not come at the expense of Sharia, ahkam Sharia. We must adhere to Sharia. That's why we have Sharia board. Right now, we have Sharia boards. Everyone has his own Sharia board, which is a blessing. But they're not talking to each other. The Sharia board in Premier Bank is not aware of the Sharia board in Gulf African Bank for some reason. The conventional counterpart, there's a Kenya Bankers Association, which is miles and miles ahead of us. It's been there for years. They have an academy. They are doing certifications and everything. Islamic banking, we are still pointing fingers in the dark. For us to really reach the point of maqasid Sharia, and I'm happy Professor Hassan is here to talk about now the higher purpose. Why do we have Islamic finance in the first place? We first of all need to fulfill the conditions of ahkam. First have to be really Sharia compliant, first of all. And then we have, of course, one of the key challenges we have as Muslims, I'm not sure about the experience in Tanzania, but the experience we have in Kenya is that by some bad or good luck, I don't know, majority of Muslims are in areas that are in hardship, the underdeveloped areas. If you look at the northern, northeastern part of the country, if you look at the coastal part of the country, majority of us are in places which are far away from the government services. We are used to hardship. So when you bring innovation to a Muslim scholar or to a Muslim businessman, to them, innovation is haram. Someone wants to see a sweat, like he's taking a camel from the village all the way to the market. He's seen some sweat. He's seen some suffering in the sun without lunch and sell the camel, go back home. Now, if you tell this person we are digitally doing something, we are buying a product digitally, within minutes we are selling it and we are earning a profit. Hapa sasa anasema, hapa kuna kitu imefichwa, kuna illa. So even as a Muslim population, some of the challenges that we are already facing in terms of especially digital innovation is people lack knowledge and the background that we come from is a big challenge. So the challenge for me is in East Africa, as we talk about innovation, how do we catch up first of all? And then how do we disrupt? We have very good progress in Tanzania, and I'm really happy with it, especially in the Sukuk front. They're really moving very fast. I know just the other day, Tanzania, actually, the Islamic banking in Tanzania was being offered by a bank from Kenya. But right now, I can confidently say that Tanzania has surpassed Kenya. We cannot even compare the two. So that's the kind of pace and speed we would like to see in all the three countries. That I don't know whether it's 63 or we're now 7 countries with the addition of Somalia to East African community. So, but for the purpose of this discussion, we really want to see both a progress in terms of regulation and all, and knowledge gap and removal of doubt and coming together as a team. Taking the case study of ABSA, in terms of innovation and where we are, currently, Lariba, of course, is the oldest Islamic banking brand in the country, offered in a window. I know we have the fully fledged banks, Gulf African Bank, Premier Bank, and Dubai Islamic Bank. But on Islamic banking as general, ABSA Lariba was rolled out in 2005. In August this year, I'm sure Sheikh Alfan was in the picture. We celebrated our 20th anniversary offering Islamic banking in the country. Yes, during that time, again, we had a number of issues that I'll talk about. But some of the things that we've now looked around and realized is, like as I said earlier, we first need to catch up, because we realize, we look at the banking industry in general, and you realize the banking industry has really made progress. Some 200 or so years ahead of us. Women in business, Sada talked about it we launched women in business products recently. Of course, it is really embedded with both financial, a lot of training, a lot of networking workshop, foreign trips, so that they can get to know what other people are doing. Because we are rolling out ABSA Next, a fully digital product for the youth who don't need to interact with anyone in the bank. Open your account digitally, save digitally, get the facilities digitally without any human interaction. Last week, we rolled out our virtual debit cards. If you're part of ABSA, you just go online, create your own virtual card, multi-currency, in any currency, just create your own card and start using it almost immediately. just top up. Of course, we will roll out the Islamic cards. We are riding on again, like I said, what's already happening in the market. Coming up with insurance product, we've been having a lot of challenges, especially we only have one company offering Islamic insurance in the country. And there's been challenges in terms of number of products. I'm sure the bankers who are here from Kenya will agree. There's some products that are not available with the insurance, like the facility guards, the credit risk insurance. All those things are not really available. So APSA has its own insurance. So we said, why don't we just ride on it and create our own Islamic window and also use the product. So those are some of the innovation, some of the catch up. That's why I don't want to call it innovation. Some of the catch up that we are doing. Of course, we've created our own digital savings account. Anyone can go to our Timiza. You can still get a facility and also save. Agency banking, it's been there all along. We are still playing catch up as Islamic banks. So some of the things that we are doing that other banks are already doing, like the holistic approach. Like we've been doing since January this year, a lot of imams workshop and training the imams. We just did recently one in Mombasa, women empowerment workshop. There are a lot of it that we are doing. Just training Muslim women and Muslimpreneurs in general on business. For instance, the most recent being training for petroleum dealers that are just training them how to do bookkeeping. You don't have to really. Of course, there's a lot that we do as all Islamic banks, all of us, a lot of ESGs through the charity fund that we have. Of course, one of the things, again, we did recently was the Islamic Finance Conference that brought together the interest players from Kenya, Uganda, Tanzania. Some of the areas we're exploring, of course, is the Islamic capital market. We're developing how do we also catch up with Rashid, our brother here, and issue Sukuk in Kenya. I know there's one which was issued by First Community Bank at one time, but that was all. We had a lot of good discussion in the National Treasury. At one point, I also used to be an advisor to the PS National Treasury. So we have very good papers lying in one of the desks there for sovereigns to cook. Nothing has been done. There's a lot of discussion going on right now on the use of AI and robotics on tasks that don't need human interaction. Those are some of the innovation that both internally and externally that are happening. But again, I also ask a question before I move to the challenges. When we talk innovation, we like thinking digital, we like thinking new products, but I don't know whether Sheikh Alfan, it really qualifies to be called innovation if we also redesign how we interact as industry players. We need to come up with the innovative method of collaborating with each other. We need to come up with a very innovative method of bringing our scholars together, of removing the doubts that people have about Islamic banking. We have a lot of catching up to do. Remember, with the fall of the Uthmani Khilafah in the 1920s, Islamic banking, the traces disappeared until 1965 again. So the other banking industry has been progressing and maturing. We're just replicating. We replicate RTGS, we replicate internet banking, we replicate mobile banking. So really, how do we innovate our thinking? How do we remove from our mind that Premier Bank here is not in competition with Gulf African Bank, but now we need to see each other as a support, as one team that is playing on one side of the football, with the conventional side playing on the other side of the football. The kind of innovation in our mindset, the kind of innovation in terms of how do we entrench knowledge gap. Those who are in the industry, I'm sure, especially in banks that have majority of non-Muslims, will agree with me. You conduct some trainings here today, very thorough trainings, people understood, you ask questions, everyone knows. 1 month later, again, you come back and you're told the biggest challenge we have why you can't sell is because we don't have knowledge gap. So how do we come up with innovation on how to create sticky knowledge? How do we create awareness? Because someone, you'll go to Mombasa, I'm mentioning Mombasa because a bank like Gulf African is very strong in Mombasa. Then you walk into a household, someone in Mombasa, and the CBD of Mombasa tells you it's not aware of Islamic banking in Mombasa. So I don't know whether it's a refusal to understand. So we really need to come up with innovation for the technological, the digital front of innovation. All we need is to catch up for now in the near future. But now the thinking that I really want to see, how do we bring in the innovative mindset, the thinking, the brotherhood, the working together. We recently rolled out the Association of Islamic Finance Practitioners in Kenya, and I was very happy that brothers joined us from Uganda, from Tanzania. Professor Hassan was here with us. When they're being rolled out, and actually the membership is from both from banking, from SACCOs, from insurance, from investment banks and all. How do you make it work? Because personally, from my experience and from what I saw, the reception is not lukewarm. So that is the kind of innovation we really need to think about. Just on the same, again, these are the age-old challenges that you all know. But for me, I will always put collaboration as challenge number one in Islamic banking. I've worked in 3 banks over the last 20 years that I've been in this industry. All of them with Islamic banking. And for me, the challenge number one is collaboration. Leave alone even the negative energy sometimes some of the banks emit when they go and talk in the market. Even just checking on Saada at where are we and how are you doing with the market, with the Muslim population. Calling across the border in Tanzania or in Uganda and asking, how are we on this dawah of riba? So we don't even have that basic level, human level, brotherhood level collaboration, leave alone the industry, the complex. We need to be having a department at Central Bank by now. Right now, the interbank and all those things are conventional nature. We don't have liquidity management. Yeah, we don't have the lobby that I'm sure Tanzania has made progress, but the lobby that was created maybe in Uganda, it's not there. In Rwanda, Burundi, I'm not sure. In Somalia, I'm not really sure. But do we have a lobby group to lobby the government? Because without government support, again, there's nowhere we'll go. There's a lot that needs to be done. So innovation cannot run ahead of all this. We need to build, this is the basis, this is the foundation. We build this foundation, then you build innovation on this, then it will really fly. Of course, the regulatory framework is conventional in nature. We've just been given some waivers in Section 12A, 12C of Banking Act, like the case of Kenya. I know we have the capital market that has made some progress in Kenya. The SACCO, the government is doing that one right now for the SACCO, for investment banking. Yeah, we have the knowledge gap awareness again, the human capital shortage, and then there's high operational cost because of the opportunity, because of the economies of scale.
Thank you so much, Brother Tego. I think we are running short of time. If you can just conclude, please.
Yes, actually, this is my last slide. So as my concluding remarks, I will say, Brother Khalfan, for us, innovation should come in form of speeding up the catch-up and also in form of how do you collaborate and work together to check on each other. Not just a accidental one, it has to be deliberate and effort towards achieving that. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa barakatuh. Thank you so much, Brother Tego, for your insights, insightful presentation, and for call for collaboration and aligning together and so on. So just to mention 2 things in Kenya is that you have recently formed an association. I think this is now the time to implement whatever the objective this association have and bringing people together to discuss issues of common interest. So though I have been listening and hearing a lot of collaboration, to collaborate, and I think now you have a vehicle in Kenya on meeting and chatting a way of collaborating, and this is a good thing. I hope Tanzania can borrow a leaf on this association of Islamic finance practitioner. These are industry players that have formed their own association in Kenya rather than just being a subcommittee within the Kenya Bank Association, which has been so for many years. But Kenya have moved a little bit ahead to say, yes, the committee is there. We'll still be doing something within the committee of Kenya Bank Association, but we have issues of our own concerns and we need to push separately without the bureaucracy of the bigger banking association. And I believe if if everything is implemented accordingly, the association can foster collaboration. It can be a vehicle for lobbying, among others. And one thing that also Absa Bank has revived is these conferences that we have. I think this year we have seen one, which of course previously some other banks used to do these conferences, but then it was not consistently. The chain broke somewhere, but now we're seeing the mentor taken by Absa Riba. Okay, annual Islamic banking or annual Islamic finance conferences are also very critical in this region to foster experience sharing, collaborations, and public awareness. So these are good things that we see in Kenya, but also, of course, Kenya, we have also seen the coming of the global Islamic funds, of which we have Mr. Adan later on to share with us what this Islamic investment banking is doing and how it achieves to empower the people within this region. Now, without taking much time, I would like to invite Mr. Salum Awad. Mr. Salum Awad is again an experienced investment banker, is a consultant, is a trainer, and currently is the CEO of Shirka. And Shirka is a platform that deals with asset management, among others. Without taking much time, Brother Salum, you have 15 minutes to share with us your insights on innovation, transformation, and empowerment through Islamic banking or through the ethical or Islamic finance in general. Welcome.
Thank you, Brother Alfan. Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillah, rabbil alameen, salatu salamu ala rasulullah. Sallallahu alayhi wa alihi wa sallam wa man wala. I thank you for this opportunity for me as well to join my colleagues who have just shared their insights and inputs to me as well, share my individual thoughts, what I see in the market, not just in Tanzania, not across the region, but of course globally. And not necessarily because I come from the investment space, but I'm also a customer as an individual and as a business to 3 different banks in Tanzania, Islamic banks. So I have quite a few things to as well share from my observations and type of things which I think we can do and from the experiences which you see from other markets. Again, I'll also try to be as brief as I can within the 10-15 minutes which have been granted to me. So this is just the highlight of what I'll be covering. And each one of these, of course, has 1 slide. So there'll be a total of 4 slides apart from the intro. And then we are looking at the mega trends, what is happening globally. I know Brother Tego mentioned the idea of playing catch up, which is critical. So as we're trying to play catch up within the local market, the global market is also running very fast. So we probably need to do much as twice of the effort to not just catch up with what's happening at the conventional banking in the region, but at the same time, what is happening globally, because at the end of the day, it will reach us. So, and what I see in terms of innovation and empowerment, what is happening now, I might not be as exhaustive, but I just try to highlight some of the things which we see, what our banks are telling us in terms of the innovation and empowerment, and what do we think we can improve, of course, in addition to all the great things that they're doing. So Shilka is just a minute to clarify what we do. We are a Sharia compliant asset management firm, and we have all sorts of services as shown on my slide. And so we have 2 wings or 2 schemes of what we're offering. One is the digital platform. So we have a mobile app on Android and iOS, which simplifies investing in Tanzania and across the region, across all asset classes. But we also have a more personalized investment scheme called Shirka Premium. This is for individual and institutional investors. So you can go to our website and learn more about what we do. So in terms of trends, what we see in the banking world, if I may, one of the things which I think we also try to do in our banks here is digital banking, and of course now we also have the neobanks. So a neobank is a complete digital bank with no physical structure, and then what we see now happening in our markets. And if you look at it historically, since most of our banks tried to, innovate, digitize some of the services, we saw there was a huge move into bringing internet banking and mobile banking, mobile apps, and all that kind of stuff, which are very important, critical for us to improve our experience as bankers and banking customers. So this is happening. Some markets already have the neobanks, the likes of Nigeria, South Africa. And then this is a trend which will end up here, because we have, out of 10 unicorns in Africa, 8 are fintech startups. And some of these potentially can become neobanks. And then probably they might eat to a lunch if we don't play quote unquote the catch up, which we advise to do. Then, of course, the use of AI and chatbots is becoming of almost day-to-day order of financial services and banking in particular. Artificial intelligence is not the future, it is the present. We are in AI as we're speaking, with a lot of investments which are happening. And then, of course, this is changing consumers' behavior. This is changing how consumers want their services to be offered. And then, of course, as service providers now, we must understand how can we design and redesign our offerings to meet with the new demands. Do I need to call a call center if my card has, has been retained in an ATM machine? Or I can just go online and do, use your chatbot and get the service or get the inquiry which I have. I got a transfer to, I did a transfer maybe the past 3 days, and the transfer is not reflected on the recipient account. Do I need to come to the bank? Do I need to call your call center, which probably will hold me for 10 minutes before I get someone next on the line? Or I just need to go straight to your site or to your social media page, and then I can have a chat with your chatbot, and then I can have everything sorted in less than a minute. So these are things which are happening, and it's not necessarily the future, it's the present. Blockchain is big, we all know, in terms of, because we all know Islamic finance is built on contracts and not necessarily products. And these contracts can use blockchain as smart contracts and make it easy to do these transactions. Issuance of sukuk, we see in other markets now, of course, using blockchain and making it easier. We see use of blockchain, let's say in Awqaf. How can we also, use blockchain as a back-end technology for some of the things we do as banks? And then, of course, ESG, this has been mentioned many times. And this is if there's one industry which is closest to ESG and sustainable finance, then it's Islamic finance, because these are the things which we all portray. When it comes to the environment, and then Rasul Salam was is the pioneer, if you may, when it comes to environmental protection. Even during the wars, he said, don't cut down the trees. You cannot get anything better than that. So you would see that Islamic finance is closest to sustainability. Islamic finance talk about inclusion, it talk about economic empowerment, and these are the things which, again, ESG and sustainable finance are trying to catch. Then, of course, there's a corporate venture capital. So this is a new concept, maybe in our markets. It's still fairly new in some emerging markets, but it's quite an odd concept in more mature markets in the West, particularly in the US, where a bank, because it is limited and is restricted by the central bank regulations on risk management, it limits some of the flexibility in innovation to finance some of the transactions. So in order to overcome that, banks have been setting up venture capital arms, either as subsidiaries or as divisions, which of course can take up these transactions, which the traditional banking cannot do. And then, of course, I'll share one of the examples in terms of what banks can also do in this space. So, if you come to, let me talk of Tanzania, because it's the market which I'm most familiar with. If you talk about innovation in the banking industry, one thing which comes out quickly is internet banking, which is great. Mobile banking, which again is a great thing. And then, of course, now Islamic banks, whether the Windows and the fully fledged Islamic bank, which we have one, are now sorting out, raising fresh capital using Sukuk, which is great because on one end, they are getting fresh capital for the expansion, but on the other end, they're providing opportunities for the Muslim investors and other, of course, investors who are interested in halal space to also find new opportunities to invest in. Because one of the challenges we have, let's say in Tanzania, for instance, in the capital market, is the limitation of diversity of products. So if you have more and more products, that's how you grow the market, and then you get more people into financial services. Statistics show that, of course, even in the conventional bond market, less than 1% of Tanzanians are engaged in the bond market. So banks issuing these new sukuks also provide a new way for people to invest in. But how much is internet banking how much can I do on the internet for my banking services? When you go to a bank, opening up you go to a bank, you want to open up, let's say, you open up a bank account, and then they ask you if you also want to use internet banking. They give you a form, you fill it, and then they ask you, put the maximum threshold of the amount you want to access or to transact on your internet banking. And let's say I put in $1 million. And then a day comes, I want to do $200,000. And then I'm told I cannot do that. I have to visit the branch. For me to do that, I have to fill the form. So with all the regulatory issues, the central bank and the risk management, we just need to find a way to innovate around that so internet banking can be 100% digital experience for customers. The same thing with mobile banking, because you do some transactions and then you move the money, let's say, from your mobile account of your bank to your mobile money wallet, and then that transaction does not get into your mobile money wallet, but is deducted from your bank account. And then there's nothing you can do. There's no chatbot. There's no way you can submit your inquiry, your claim, and then it can be sorted. And then you end up calling the call center, and then they ask you, go to your nearest branch. So we are still in a way that I think we are not fully fledged digital in terms of digitization, which I know is a process, and over time we'll overcome that. But for me, as a customer, I think it's important for me to point that out. In terms of empowerment, yes, most of the things are happening. I know some of the banks here in Tanzania have tried to, go to the bottom of the pyramid to come up with microfinance products. Again, because that's the majority of people are. Then we must find more, and we must get more and more products. SME products, of course, this is changing. In Tanzania, for instance, of all the bank lending, which is about 36 plus trillion in Tanzanian shillings, SME banking is less than 12%. It's actually 12% in the past 3 years. I'm not sure if it has gone above 20%. While SMEs, you are the largest contributor to the economy. So I think there's more we can do. Mortgages, housing is still a major issue. If you come to Dar es Salaam today, which is the largest commercial city in the country, 75% of people live on rented homes. This is a market. It's opportunity for people to own homes. It's a market for Islamic mortgages. So I think I've gone through some of the banks in Kenya on your website with real estate financing, whether it's for the developers and the people wanting to buy homes. I know our banks are also offering this product. So it's great as we're trying to empower our people, because housing is one of the most needed services for anyone. Women and youth banking, I went through some of your websites. and Madam Sada also mentioned about women and youth banking. This is very, very important because women have been sidelined for a long time and they've been excluded for a long time, even though they are the center of most of the productive economic activities, especially in the rural areas. So we must find ways to lift them and bring them into the mainstream economy. And financial services is at the center of that. Youth is the same thing. If you look at the population in Africa on average, you're talking about more than 2/3 of people are young people. How are we getting these people into formal banking and financial services? So again, all these things we see happening. So this is what I think we can do more in terms of my own thoughts and my own suggestions. I know some of these things you guys are already doing, but I say, hey, let me just share what I think we can improve. Number one, I go back to my previous point in terms of digitizing the entire experience. So if I have to opt for internet banking, it should be 100% internet banking. I don't know what it takes to do that. I don't know how long it's going to take to do that, but we should aim for that because that's what we need. And if we are to bank millennials today, and the Gen Z will be the future entrepreneurs in the workforce, I'm sure they want to do banking with the most convenience. They want to be wherever they are, and then they can access the banking services and other financial services from the tip of their fingers. Number two is the use of chatbots over call centers. I don't know for how long call centers will run. And now I also see in other markets, call centers now are manned by robots, but it can be frustrating. If you want to spoil your day, call a call center. It's as simple as that. In Tanzania, for instance. And then first of all, they'll hold you on the line for 10 minutes, and then the line can be cut off, and then you have to call back again and again and again and again. And then even if you get a line to talk to a call center agent, what happens is probably out of 5 questions you have, the call center agent can only respond to 2 out of 5, and then they'll advise you to visit your nearest branch. So we really need to move into chatbots using the AI, and then most of the issues can be honestly solved. Super apps, I use one of the Islamic Bank's apps here, and it's superb. I can do most of the things. I can pay my bills, I can do all the transfers, but it's still limited. Some of the things I cannot do, I'll still have to move my money to other apps for me to do other things. So if we can go into the concept of super apps where I can do everything with my mobile banking app, then that will be super. And then wealth management, I think this is one of the things we have been sitting on. I cannot say much about other markets in East Africa, but at least for Tanzania, banks have a huge role and opportunity that we can leverage on to grow the wealth management industry. I know some banks who want to go into private banking, but wealth management is critical. How many customers put their money into the bank's account and then they hold this money for a long time, of course, without investing this money responsibly.
Dr. Salum, we're running short of time. I've added you just 5 minutes. Please try to wind up.
Inshallah. So again, in terms of empowerment, I think instead of banks keep on trying to come up with microfinance products, which has proven to be very challenging, at least in Tanzania, why don't we partner now? And then I go back to Brother Tego talking about collaborations and partnerships. You have some microfinance institutions which have done some decent job. Can we partner with them and use them as channels, as managers on the ground to manage some of these transactions? In Tanzania, for instance, total book size, which sits with microfinance institutions, is about 1.2 trillion, which is close to $500 million. It's a lot of money with more than 1.8 million accounts. How can we leverage on that as banks in partnership with microfinance institutions? Startups, again, fintechs in particular, have come up with solutions. Why should banks, try to come up with new products, take you much longer, invest in R&D, while there are startups that have designed, launched, and then, of course, proven their fintech models, which we can leverage on, and then they can invest in these fintech startups, which will add value to the bank. You can own an equity stake in the fintech, and at the same time, you can use the solution to serve your customers. And then Abu Dhabi Islamic Bank is doing this with Abu Dhabi Ventures, which is one of the examples of the corporate venture capital, which I was mentioning. And then, of course, we can allocate more into productive sectors. In Tanzania, for instance, 36 almost of all bank lending goes into personal loans. In Islamic finance, Islamic banking, talk about inclusivity, we're talking about empowerment. We need to allocate more funding to more productive sectors. Then again, zakat and waqf products. How can we leverage banking infrastructure? How can we leverage banking resources and experience and the customer reach to roll out these waqf and zakat products? And then we can bring more Muslims, into collection, and at the same time using most of this money to finance some of the Islamic finance activities. So just to wind up, this the way banking is happening in Tanzania. Would see almost 50% of all banking in Tanzania in terms of loans goes into personal and trade loans. How much is that in terms of empowerment? How much is that in terms of transformation? How much is that in terms of Islamic banking as a platform to, promote economic productivity? I think this is one of the areas we need to disrupt and have more financing. Aggregates about 13.2% of all lending. And then, of course, look at building and construction, transport and communication, all these other key economic activities which contribute the highest in terms of the GDP growth, get less than 10% of all bank lending. This is one of the examples, let me finish here, of partnership. And I didn't want to talk more about this. I just wanted to bring this on board to understand the intersect between banks and other players in the market, whether it's wealth managers, investment bankers, whether it's microfinance players. There's a lot that we can do together. At Shirka, we are building this product for liquidating investors who want to exit the market prematurely before the maturity of their securities. But we all know majority of Sukuk investors tend to invest and hold to maturity. Some want to exit prematurely, but they don't have a way to do that. So we are looking at, can we set up a liquidity fund where we can buy out these securities to allow these investors to exit? But can banks also come on board and be part of such type of collaborations we want to do? After that, I thank you very much, Brother Khalfan, for this opportunity. I had to go quick because the time is limited to allow other people as well to talk. Barakallahu feekum, jazakallahu khairan.
Yeah, thank you. Thank you so much for your very insightful presentation. We wish we had more time, but we appreciate whatever you are able to cover. It's quite insightful. Just to appreciate, right, bringing up the issue of Waqfu and the issue of Zakat and others, of course, but I'm mentioning these two because we have seen, especially in Tanzania, like cash Waqfu coming into play. We have seen some Zakat collected in Islamic banks, but we haven't yet seen much in terms of promoting these products, and also showing the results, the impact of these products to the community. This has not been forthcoming. And of course, we need in countries, we need, of course, these things to really be promoted and impact to be seen. But in Kenya and in emerging countries like Uganda, these things need not to take time to be part and parcel of banking products. So in Kenya, we are yet to see any cash Waqfu product that is there, but I know in Tanzania we have PBZ that has a cash Waqfu. I also know the recently a collaboration that was done between Shirka and Haya, among others, in order to promote cash Waqfu that is going to be invested, and then the returns are going to be allocated to charities. These are programs that can really empower people. They are transformational in people's lives, that we need to see them hugely, massively promoted. But again, for one reason or the other, we were yet to be there, and it's something we needed to really move on. Salim, if you can stop sharing, because we're still seeing your screen. And now I can invite Dr. Luja. Are you there, Doctor? Dr. Luigi, are you there?
Yes, I'm here. I'm
Do you
here.
have a slide to present, or you are going to share your insights directly?
Let me share the insights directly
All
because we
right.
have
So
short
I'm going,
time.
yes, please. And apologies. If you can be also a little bit briefer, we'll appreciate. So we have here our final speaker on this topic of Islamic banking, innovation, and empowerment. One of an academician, trainer on Islamic banking, a very passionate scholar on Islamic banking in Uganda, none other than Dr. Suleiman Luja. We are very happy to have you this time, as well as we appreciate you have always been ready to share whenever we invite you in this forum. Thank you so much for making time to this forum as well. And we look forward to hear from you from the past 1 or 2 years, what has been happening in Uganda in terms of Islamic banking, innovations, empowerment, and transformation, and maybe what are your wish list going forward. Most welcome. Within 10 minutes, we will appreciate so that we can bring in Professor Ahsan for another session. Thank you, Doctor. Most welcome.
Alhamdulillah. والصلاة والسلام على رسول الله وعلى آله وصحبه أجمعين. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي إنه من سليمان وإنه بسم الله الرحمن الرحيم. Thank you, Brother Khalfan. And to bring you into the perspective of Uganda, in fact, Uganda, we have just started Islamic finance, Islamic banking. It's not because we intended to be late or come after everyone in the East African community. The intention of our government here was to embark on this thing, Islamic banking, when we have the legal backup, fully the legal backup, all the legal framework in place. You remember, Brother Khalifan, we started way back in 2000. Our laws were changed in 2016. 2016, that is when the laws were amended, but we had a long journey. You remember OIC summit sat here in Uganda in 2008. We are OIC member country, by the way, among all the East African countries. Okay, Somalia is also a member. It joined later, but I mean the ones, Kenya, Tanzania, Rwanda, it's only Uganda, which is a member country. So we had the OIC summit here in Kampala, here in Uganda in 2008. That is when we started on this issue. It took us around 8 years, but the government intention was to have the legal backup. That is why we had all that long wait. We had prepared. By that time, if you can remember, I was still working in Tropical Bank. By the way, we pushed it. We waited until 2000. By the way, that bank, Tropical Bank, has just started, has just obtained the license, like 2 weeks back or 3 or a month. We had another bank which started this process in 2023. That is Salam Bank. It came from Djibouti. It started. It was the first bank to obtain license in Uganda here. So the intention of the government was to have the legal backup, alhamdulillah, but we are on it as Uganda. At Microfinance Support Center, I also worked there, but that is in the microfinance sector. We'll talk about it briefly, maybe in 1 minute towards the end of my presentation. So that is not a bank. It is a microfinance development institution which started, which rolled out Islamic finance in Uganda in 2016 when the laws were changed. So what are some of the challenges we have? And I think we share with other countries, I think, Kenya, Tanzania, not much with Sudan and Somalia, but these other countries, Rwanda, Kenya, Tanzania. Number one is the government goodwill, because to have Islamic banking operational and successful, we have to have prudential supervision from the regulator, the supreme regulator. And in this case, I mean the central bank, all the central banks we have. This is Bank of Uganda, for the case of Uganda, the Central Bank of Kenya, and also the Central Bank of Tanzania. They need to do their part. They need to benchmark from serious market. You were in Malaysia. You saw what happened in Malaysia. What happens in Malaysia? The Central Bank of Malaysia, that is Bank Negara Malaysia, came out. That success story they have today, which is being talked about in this area of Islamic finance. It's the global Islamic finance leader. It's because of the government willingness and central bank, that is Bank Negara, coming out to do their role, which is twofolded: prudential supervision, not just prudential supervision. Okay, before industrial development, let me talk about prudential supervision. We mean here, you have seen it coming out with scholars, their commitment to see that they really supervise. We had, for example, in Uganda here, we rolled out, in fact, we had a good push when we had the Central Sharia Advisory Council in the Central Bank, Bank of Uganda here. But you see, before we even rolled out the first bank in Uganda here, we amended our laws to remove the Central Sharia Supervisory Board from the Central Bank. You see, even in Kenya, it is the same case. You pushed. When you started in 2007, you pushed until you saw that the ideal way of doing. But I don't know, maybe we can get some updates where you stopped and you had to shift back. All the developments you had to have the Central Sharia Advisory Council in the central bank, that is the Central Bank of Kenya, went futile. What happens? We need some updates on that. So for the case of Uganda, as I've told you, the central bank cannot have this successful until it is fully engaged in it. East Africa, we have some challenges. Maybe we have seen regulators trying to copy what, for example, the UK are doing. But UK market is different from our markets here. They are very good in terms of prudential or compliance with the laws, and they are very prudent, more prudent than us here in terms of compliance with the laws, and even their laws are too advanced. And even their markets, when you look at their markets, you talk of corporate clients, which is not the case. The clients, the sort of clients we have in East Africa here are kind of retail, not even retail, they are micro finance. They are micro, they are too small, which need the regulator to be actually on them. So we need prudential supervision from our central banks here. And also number two is industrial development. Governments, our governments here in East Africa, they need to come in, not just supervising, but just to see that we have a roadmap. They need to come in. They need to push the development. We need to have a roadmap. We need to have a blueprint of where we are going. For the sake of doing, they need to do what? They need to see that really we are up to something. We are developing. We are going somewhere. After like 10 years, after like 15 years, we need to go. We need to have developed to a certain level. Number two, and maybe the last one, is the development, we need to develop Islamic alternative investments, not just relying on commercial banks. We need to develop alternative investments, Islamic alternative investments, such as Islamic wealth management. I was very happy when I heard Shirika from Tanzania starting. But our market, some of our clients here in Uganda, in Kenya, in Rwanda, they think it has to be banking. It has to be a bank to offer them financing, which sometimes is not possible because of the retail kind of clients or micro kind of clients I talked about. Some of our clients, in fact, not some of them, but majority of them, over 90% of our clientele, they are not clients of commercial banks. They need Islamic microfinance, which is not yet developed. Everyone is looking at banking. Everyone is looking at banking. I don't know how many calls I get a day, clients, customers calling me, asking me. In fact, you keep on sending them to banks. Go to banks. We have banks which have started. There is Salam Bank. There is Tropical Bank, which has started. They have just got license. They are saying, no. We need to go there when we are sure that really we are going to get financing. But really, when you look into them, when you review their application, you find that he's not a bank client. And you know, banks are banks. Conventional banks with also Islamic banks, they have the same thinking. These are commercial banks. They are not microfinance institutions. They are not development institutions. They are not government institutions which can come in to help people out of poverty. So you find that banks, in fact, they cannot finance a poor person. So over 90%, as I've said, they are clients of microfinance institutions which need to be developed. And others, they are too big. They don't need to save. They need to invest. So we need to develop really Islamic alternative investments for the big clients, the big corporate ones, who don't just need to save their money, who need to invest. Like Shirika, we need to have Islamic wealth management where they can really do kind of investment. That is collective investment schemes. Thanks for Tanzania, you have developed this area. Uganda also, we are towards this. By the way, some update as I wind up. I had some other 2 points, but I can stop on this. We are trying to develop Islamic capital market in Uganda here, Islamic capital market, mashallah. We have established an Islamic wealth management. The first Islamic wealth management is under formation. It's called Baitul Mal, Islamic wealth management. What we are looking at is to tap into these clients who feel that they have capital which they can invest. They don't need banks, but what they need is to go out and do kind of investment. But of course, they need also, we as Islamic wealth managers, we shall need to collaborate. And this issue has been talked about. We shall collaborate with banks, Islamic, I mean, and also Islamic windows, which have started. So we are on that side. We have developed Baitul Mal, and we have developed Islamic wealth management, which is going to work hand in hand with other sectors or other industries in Islamic financial sector to see that real Islamic finance develops. If we had time, I had more, but I wish to stop here and just thank you, the organizers, thank you, everyone. And we look forward to collaborate with everyone in the East African community to see that really we do this thing together, we develop it together. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank you so much, Dr. Lugia, for sharing with us the insights of from Uganda. We really appreciate. Due to the interest of time, we are now going to another topical session, and this is going to be on Maqasid al-Sharia, And here we have Professor Dr. Hassan Lahsasna. Professor, do you hear me?
Yes, sir.
Okay, I will stop sharing so that you can share.
Okay.
And then I will just briefly introduce you.
Okay.
You can try to share, Prof.
Yeah, just give me a second here. Can you see now?
Aywa, naam, very clearly. Thank you so much for accepting to join us, Prof. We really appreciate. Secondly, would like to briefly introduce our next speaker. He is a professor on Islamic finance, among others. He's an academician who has written many books that, mashallah, we have been benefiting a lot. I've read several, not less than, I think, 4 to 5 books of Dr. Hussein Lahsasna, which has been very insightful to me and helpful to me. He's a trainer, he's a consultant, he's a Sharia board member as well. He's a very helpful, I would say, in our region. He has been in Kenya several times. I'm not sure, Prof, if you have also been in Tanzania, but maybe soon we shall bring you to Tanzania. But has been a frequent contributor and visitor in Kenya and sharing with us his very useful knowledge on Islamic finance. We really appreciate. He is also currently Chief Executive Officer of Salihin Sharia Advisory that is based in Malaysia. There is a lot to talk about, Prof, but due to the interest of time, I will simply invite him to do the presentation. Wajazakumullahu khairan. Most welcome, Prof.
Thank you very much. Thank you very much, Brother Khalfan. First of all, I really appreciate the initiative of this forum. It's really something that needed very often, just to combine the thoughts and exchange idea and do kind of update and exchange and definitely answer some of the questions, especially posed by the participant. I try to be brief for the interest of the time. The topic that has been assigned to me by brother is really timely, and it's a very important. Maybe some people may think that the Maqasid al-Sharia, it is really an academic subject related to the Sharia scholars, and it is part of the Islamic jurisprudence and more often related to very close segments of group, which is partially true 5, 6, 7 years ago. But I think since I may say a few years back, the Maqasid al-Sharia start to penetrate Islamic finance market. Initially through conferences, topics, contributions from Sharia scholars and academicians. But it has been slowly penetrated in the space of the Islamic finance at the regulatory levels. Then we start hearing governors, especially started maybe, I see it visible and strongly in Malaysia. Started with the governance talking about Maqasid al-Sharia, ministers talking about Sharia, prime ministers talking about Maqasid al-Sharia. And it's become part of the blueprints of the Security Commission's blueprint agenda and academic strategy of the central bank. And it's become part of the strategic master plan of the government itself. So Maqasid al-Sharia moved from academic teachings and understanding and move from Islamic jurisprudence teaching into Islamic finance, taking a front what's so-called a position, especially after 2015. And I think one of the reasons that helped Maqasid al-Sharia to become somehow within the last, after 2015, somehow a dominance in the thoughts, statements, and speech. In every topic, you will find Maqasid al-Sharia. I think partly because of the sustainability SDG, which has been endorsed by the United Nations in 2015. And since then, the central bank basically took the initiative to introduce what's so-called the value-based intermediations, which is the other coin of SDG. So if you have one coin, so the SDG is one coin, Maqasid al-Sharia is the other face of the coin. And central bank at that time in 2016 chose to introduce the sustainability from its own perspective using Maqasid al-Sharia as the framework for that kind of call. And since then, the SDG and sustainability has been discussed, has been analyzed within the context of Maqasid al-Sharia. So Maqasid al-Sharia become very strong value propositions in the market. And the Maqasid al-Sharia, what has done, has shifted at least, not in every market, but at least the start has become visible, especially in some jurisdictions, maybe like Malaysia, Pakistan, and UAE, has shifted the call of Islamic industry, Islamic finance industry from Sharia compliance to impactful, meaning oriented and shifted the thinking from the focus on Sharia compliance to go beyond Sharia compliance and looking at the impactful of the products and services. So it is no more, it is whether it is compliant or not. So compliance is given, but what's the contribution of these products when it comes to Maqasid al-Sharia? What kind of positive impact that Maqasid al-Sharia has can create value to the society, environment, and so on and so forth. So this is what's so-called also in Islamic jurisprudence, the ma'alat al-af'al. So the ma'alat, the consequences of the decisions in the Sharia making, Maqasid al-Sharia become a very important component to screen the positions. This is not everywhere, but it's coming and growing up, and we'll see some of the initiative later on in our presentations. So, but let me start the discussions on Maqasid al-Sharia. I will not, of course, read the line by line and point by point. I will just go to high-level descriptions. And of course, the materials I will share it with Brother Khalfan and anyone interested so he can get it from him, just to manage the time. So in brief, Maqasid al-Sharia is the objective of Sharia. So the objective of Sharia is the objective of Islamic, or the purpose of the enactments of the law from Sharia standpoint. And if we look at the Maqasid al-Sharia, we find a kind of very close synergies. The one who knows sustainability and get involved in studying sustainability. So basically, they always talk about the positive impact. So they always use this word, the positive impact, meaning they look at the positive outcome, positive impact on society, environments, and stakeholders, shareholders, and so on and so forth. So Maqasid al-Sharia also has this kind of two components, which is mentioned here, that talk about universal value, which is consistent with Sharia, talk about the public interest of people and society at large, promoting virtue and preventing vices. So it is basically, in a nutshell, Maqasid is driven by what's so-called the maslaha, public interest, and it is mainly preventing evils and promoting good, preventing harm and promoting good. That's what Maqasid al-Sharia is about. And as you can see, it is somehow within the purview somehow of what the sustainability try to achieve. Furthermore, if we look at the maqasid, we will find some categories that maybe everyone is familiar with, which is al-daruriyat, which is the essentials, and the hajiyat, which are the what's called the needs, and the complementary, which is the tahsiniyat. And this categorization is very important for decision making for products, also classifications, and importantly for decision making. Just to share with you that the Central Bank of Malaysia has issued a paper related to the assessments of the Sharia scholars of the Hajiyat. Because one of the things that has been criticized a little bit is the deployments of Maqasid al-Sharia in the decision making, whereby it's become like a magic ring that any problems you may face. So you will deploy Maqasid al-Sharia and you pick up the Hajiyat or Daruriyat to somehow cease the enforcements of the strict law and go for the rukhsa, which is a kind of an exemptions and typically, of course, the subscriptions of conventional product and instrument. Like, for example, you cannot go to a re-takaful, so you go on a reinsurance based on the haja, and so on and so forth. So the haja and darura become an instruments that basically sees the strict law and go for a kind of exemptions and subscribing to the Sharia, conventional product and services. So the central bank actually came up with the resolutions or with the policy documents. I can share it with you if you are interested to have a look. These policy documents on the Haja is to basically restrict the deployments of the Haja in the decision making. In the past, if the Sharia board want to make decisions based on Haja, so would you just make the decision, well, this is a situation and scenario when there is a haja, and therefore a possible violation of Sharia rule and requirements could take place, and they allowed what they have to allow. Now, in Malaysia, it is not anymore practice. Now, in Malaysia, if the Sharia board take decisions based on haja, so that haja has to be what's so-called escalated to the central bank. First of all, you have to do the due diligence, you have to do the assessments, you have to comply with the requirements of the policy documents of the Haja, do the gap analysis, and based on that, it should be tabled to the Sharia board. Sharia board will make decisions within the parameters, then applicate to the board of directors. Board of directors will approve it, and it goes to the central bank. Then the central bank will assess that decisions, whether it fall within the Haja or not. So that's become the deployments of part of the Maqasid al-Sharia is regulated under the hand, in the hand of the central bank. And one of the reasons is to control the deployments of Haja in the decision making. It will not be a bit loose, because what has been seen is that the parameters of deployments of the needs become a bit loose, and everyone will just use it to facilitate a conventional what's called instruments, product and services. Now it's become very strict, meaning you have to fight and make sure that the products team, Sharia board, Sharia advisory, board of director, all are on the same page, and it has to go to the central bank for approval. Otherwise, it may turn down. It may turn down. So that's basically the kind of the Maqasid al-Sharia becomes somehow partially controlled by the central bank in monitoring the decision of the Sharia scholars as well. When we look at the necessity, you know, this kind of necessity, you know, Hifd al-Din, protections of religions, protection of life, protection of nafs and intellect, and al-mal, as you can see, the mal or the wealth is part of it, which give the linkage and kind of blessing of Islamic finance being affiliated to Maqasid al-Sharia, because Islamic finance, part of its objective, preservation of the wealth, which is one of the main objectives of Sharia. So again, it is promotion of benefit and preventing harm. And of course, when there is a trade-off between preventing and promotions, always Sharia will have priority to prevent over promotion. Now, let me just briefly talk about the initiative in the market, which I think one of the very important points I want to highlight to show it's not anymore like in the past become an academic topics. Now the bankers, especially in the context of some jurisdictions, especially like in Malaysia, they have to know Maqasid al-Sharia. and they have to know the parameters of Haja and Darura, because they are the one who have to engage in that and convince the Sharia board that this is a Haja, and even if it is a Haja, they have to make the what's called parameters and so on and so forth. Now, let's start with the central bank briefly. Central Bank of Malaysia, as I mentioned, following the endorsement of 2015 of the sustainability, came up with the two policies in 2017. The first one is the value-based intermediations. I think I just mentioned it, then I go to the next. So Central Bank, we have initiative, we have the UAE Central Bank, then we have SIBAFI, then we have IOFI, then we have Security Commission Malaysia. Let me go to the second slides. So on the Central Bank of Malaysia, they have in 2017 the VBI, which is value-based intermediations for banking, and VBIT, value-based intermediation for takaful, meaning that banks become outcome and impactful oriented approach. And this one goes from the what's called board of directors and go down, whereby the bank has to subscribe to the value-based intermediations, it has to blend it and integrate it in its policy, in its vision, its missions, in the products, and the services, and so on and so forth. And the bank also created what's so-called scorecard to assess the financial institutions, how their contributions to maqasid al-Sharia. But the central bank here took the route of value-based intermediations in the form, but in substance, it is maqasid al-Sharia. Now, second one is the Central Bank of UAE, whereby in their sustainability guidelines, they clearly emphasize that the bank has to make its policy towards sustainability and how to implement it. And of course, the sustainability in the discussion, if you look at the guideline, they are talking about what's so-called maqasid al-Sharia. The other initiative is SIBAFI in 2022, the issue sustainability guide. And the sustainability guide is a kind of the sustainability from an Islamic perspective, meaning that they didn't pick up the UN, United Nations policy as it is and implemented, but they create new what's so-called versions and editions, how sustainability is understood from an Islamic perspective, and they issue the sustainability guide, which is, I think, available online. You can get it. If you look at the sustainability definition, it's a very, very much different than the sustainability, how it is introduced by the United Nations. And that one, the key drivers is maqasid al-Sharia. Now, the following year, the SIBAFI moved to very, by the way, SIBAFI is the Association of Islamic Bank in the world. So meaning that their guidelines, their what's so-called publications basically is available in the hand of all the Islamic bank in the world. So the impact meaning it's there. So the issue Maqasid guide, and this Maqasid Sharia guide, it's basically moved from sustainability to spell it out clearly. And this is due to the demand of the market, what is Maqasid Sharia is about, and even they have professional certificates and training and guide on Maqasid Sharia. Now moving to IOFI, in their decision-making process, which is a standard, I have the privilege to be part of setting that standards. That standards talk about how the Sharia scholars basically make their decisions. And if you look at these Sharia standards, they clearly mention two things. And they spell it out very clearly, meaning in addition to whatever methodology you have to look at. So the two things that make them visible is two: sustainability and maqasid al-Sharia, meaning that in looking at the decisions, so it is not anymore permissible or otherwise based on the adilla that you have in hand, but after you finish that process, which is the compliance, which is the assessment of the legal aspect of the case, then you do the assessment of the impact on society, impact on the environments, what's so-called looking at the maqasid al-Sharia, what kind of contributions that the product could do, and based on that, you take your final decision. Which means, from a Sharia compliance standpoint, the case could pass, but it could fail if it didn't realize the intended objective. Just give you an example. Let's say, for example, one company has a problem with the environment, and let's say it is blacklisted, or it is it has a report and in cases that this is not friendly with the environments and so on and so forth. I want to submit for financing. It's a normal company doing business. From the trade finance or whatever financing, 1, 2, 3, 4, check risk assessment, it's passed the assessment. But when you look at the sustainability dimension, when you look at the maqasid dimension, you see that the company basically has a problems and going against some of the objective of maqasid, violating some of the principles that should be preserved. Could be problems with the human rights, could be problem with the workers, could be problem with the environments, could be problem with the governance, and so on and so forth. And therefore, the ultimate and the final decision will be rejecting the financing to this company, not because of the compliance, but because the angles of the sustainability and maqasid. That's the trend. It's not happening today or tomorrow, but that's the trend of the market, which is happening in some banks, happening in some jurisdictions, but it is growing and the push is there. Typically, it depends how the financial institutions are ready in their jurisdictions, but one day it will be the what's called the directions and the umbrella of the thinking, similar to the stock market. The stock market, you may have a Sharia compliance stock, but it's not listed in the ESG, for example, or if there is a development of maqasid al-Sharia or green list. So if it is not listed, so maybe it's, even though people may go and invest in it, but it may not be preferable investments. Why? Because it's lacking the maqasid. But a stock which combine between, let's say, Sharia compliance and green investments or ethical investment or ESG investment or maqasid compliance investment, it will have more privilege. And therefore, the impact to the society will become visible, and initiatives and commitments from the board, from the Islamic finance industry, for the financial institutions to the society will be more stronger. The last point I would like to share on this slide is the security commissions. Security commissions were very strong in the market. It's regulating the Islamic stock market in Malaysia, I mean the Islamic capital market. And they come up with the guidance. And the guidance basically, it comes with the what's called general maqasid, which are the daruriyat, necessity and needs and embellishments. Number one, and second one, the 5 maqasid Sharia in Islamic finance, like for example, justice, equity, clarity, transparency, accountability, and so on and so forth. Then they come up with the 16, they call it aspirations, distributed among these 15 principle distributed in 6 aspirations. Now the direction of the central bank, the security commissions, they are working now on additional note on maqasid to simplify the guidelines and apply it. It's available online, also you can get it. Is to every institution now, when it comes to Islamic finance products, so they added one section. These sections is a maqasid al-Sharia dimension. Maqasid Shamia clause, meaning that your product, let's say sukuk, let's say ETF, let's say stock, whatever it reads, tell your story on the compliance, but you have to add section on Maqasid Sharia, showing and demonstrating how this product contribute to any one of the aspirations, one of the 6, or any one of the 15, it has to be spelled out. And that kind of directions is to push the industry when you design your product from day one. You don't look at the profitability only, don't look at the compliance only, but you have to look how this product will contribute to the maqasid al-Sharia through the 6 aspirations that's provided by Security Commission of the 15 principles, and therefore the impact could be tangible in the future. Now, briefly on this, I will not spend much on this, but just high-level points trying to look how close the maqasid al-Sharia and sustainability. And here there is a kind of a very close mapping between them. You see, if you look at the maqasid Sharia, they promote benefit and prevent harm. And if you look at the sustainability, they are talking about creating a positive impact. So there is a kind of form, I mean, from the outcome, it's about promoting good and evil. And both, they have the same objective, meaning promoting benefit and preventing evil, or creating a positive impact, the result, the overall objective is the same. And therefore, you'll see mapping. Of course, when you look at the SDG, there are some reservations on some of them, especially the SDG 5. We are not going into micro discussions on those, but I'm talking about the high level and the overall sustainability in a way is talking about creating a positive impact. Of course, we have to put some reservations on some SDGs, especially the number 5, which has been heavily criticized. And this is the mapping. You do a mapping between Maqasid al-Sharia and the SDG. You see a kind of close mapping, whether on the main universal Maqasid, the 5 Maqasid, or the Maqasid in Islamic Finance, which is justice and equity, preventing harm, transparency, and circulation of the wealth. And the cross will be either on the environments, on the social, and the governance from the ESG, or from the 17 SDG as been presented in this chart. And here are some of the slides showing how these connectivities and linkage between them. If I just take one for the sake of illustration, so you have the environments and social and governance. If we just take the environments, climate resilient, for example, ESG, and this one, SDG 6, clean water and sanitations from the Maqasid protecting life and have the nafs. So it goes because it has a relation to the healthcare. It has a relation to protecting the life of a human being. And therefore, it's go under the purview of Maqasid, and all the SGD will go on the same pattern of approach. So what's the result? This is the last slide, just to be brief on the discussion. So what's the result? The result is the orientations and the movement is the shifting. I would consider it a paradigm shift. Of course, despite what Donald Trump, is trying to do, I'm talking about the global one. From 2015, it was a very strong and good initiative, despite, Donald Trump didn't believe in the sustainability and criticized it very heavily. But despite that kind of criticism, the initiative of sustainability drive and consistent with the Maqasid al-Sharia, whether the West give up on the sustainability or not, it is part of the integrated of Maqasid from its substance perspective. Why? Because since 2015, since the trend of sustainability from the West and Maqasid al-Sharia from West, we're talking about shifting in the thinking and the pricing. So it is not anymore 1P, which is 100% profit, but it is a shift to distribute the P on 3 major components. Consideration of the planet, meaning you may give up some of the profits and some of the benefit due to consideration of the environment, and 30% for the people, which is related to the society. And of course, you have to consider your profit. This is what we call it the triple P bottom line in the decision making when it comes to the profit. And hence, you create a kind of check and balance between your self-interest and the interest of the others. Could be environments and could be what's so-called society, and therefore the theory of profit maximizations, a strong competitions with a dirty approach, it not become anymore within the vocabulary of the business banking, whether from the angle of sustainability or the angle of Maqasid. With that, thank you very much. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. And thank you very much again, Brother Khalfan, for your kind invitation. Shukran.
Thank you so much, Prof, for your very elaborate explanation. We really appreciate making time and taking us through this very huge topic. From what I know is you have written a book on this issue, and there are a lot of research paper on this issue of Maqasid Sharia and embodying it within our financial system. And why we chose to bring this topic is because this is where we see advanced markets like in Malaysia and so on are geared towards. And we don't want to play catch up after many years to find ourselves also within this very important paradigm. So we need to start having this conversation right now. And to my personal experience, I think we need to do a lot to ensure maqasid sharia in our banking products and our services. So there is a lot to be done. I normally just wonder, and sometimes I don't get responses when I ask some colleagues that if just a person who keeps his money in your account, in your bank account, okay, and he needs to preserve the value of this money. Okay, he wants to protect it, but we have the maqasid sharia of preserving the value of this wealth. But we know that every year this money loses at least 4%, 5% due to the inflation. And still, we cannot even be able to reward or to be able to share profit under mudaraba accounts that is above the inflationary rate, at least to protect, to preserve the value of this currency. How are we diverting from the maqasid? We are protecting, but we need to move on beyond protecting these deposits by also ensuring that we retain the value of this fund. Unfortunately, this is a journey that will take time to reach there. You know, as commercial enterprises, we all know as practitioners, normally you look on minimizing cost, increasing revenue. You find that this is a kind of between shareholders' interest versus stakeholders' interest. A lot of things comes into play and we lose track to achieve maqasid. But I would really like to see the industry grows beyond these shareholders' interest and create wealth to the depositors by ensuring that we are able to not only protect their funds, but also be able to preserve the value of their funds in order to achieve at least the minimum of preservation of wealth as what we know about it. That being said, we will move on to another speaker, another session given the time. And inshallah ta'ala, we allow you members who have joined to drop your question on the chat because we might not have the Q&A, but drop the question on the chat and our speakers and other members can share thoughts towards responding to your question. So feel free to drop a question on your chat. Now, I would like to invite Mufti, Mufti Ahmed Suleiman. I'm not sure if he's with us. Mufti, are you there?
Assalamu alaikum wa rahmatullahi wa barakatuh. Yes,
Alaikum assalam wa rahmatullahi wa barakatuh. You can either, yes. All right, mashallah. All right, so let me just briefly introduce our Sheikh. He is joining us from South Africa, but he's also well known here in East Africa. He has been visiting Kenya for many times. And Alhamdulillah, we have been, personally, I've been interacted with him and learned and worked at some point with him. So the Sheikh is going to share with us empowering sub-Saharan African economy through ethical and inclusive Islamic finance. He is a Sharia scholar. He's a consultant, he's a trainer on Islamic banking and finance, and he's based in South Africa. And he sits in different Sharia boards within Sub-Saharan Africa, including here in Kenya. He sits within the Sharia board of the Premier Bank. Thank you so much, Sheikh, for accepting our invitation. I know you have a very tight schedule. So let me allow you to present, and also after your presentation, we can also allow you to proceed with your other engagements. Without taking much time, please, most welcome.
Jazakallah khair, Sheikh Khalfan. Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillahi Rabbil Alameen wa salatu wa salamu ala Sayyidina Muhammad wa ala alihi wa ashabi ajma'in. اللهم افتح لنا بالخير واختم لنا بالخير واجعل عواقب أمورنا بالخير بيدك الخير والعافية إنك على كل شيء قدير وصل اللهم وسلم على نبينا محمد وعلى آله وأصحابه أجمعين آمين برحمتك يا أرحم الراحمين. Assalamu alaikum wa rahmatullahi wa barakatuh to one and all. I have been given the task to talk to you today about empowering sub-Saharan African economy through ethical and inclusive Islamic finance. Now, this is a very large area. Sub-Saharan Africa is a big area. It covers different countries, West Africa, East Africa, Southern Africa, Central Africa. Obviously, what works in the one area may not work in the other area. We're looking at a large population of over 1 billion people, of which over 30% are Muslim people. So what may work in one economy may not necessarily work in another economy. We have to have different strategies for different areas. However, that is not what I'm going to be talking to you about today. I would like to talk to you about a few common themes which I think can work for all economies and for all areas. And it is sometimes we get the basics wrong. We need to talk about some basic elements sometimes. And if we get these basics right, we can move forward. I will sometimes try to refer to the South African experience. Obviously, I'm from South Africa. I've been involved in the South African Islamic finance industry for the last 20 years or so. So in some sharing some of my thoughts, I will share with you some of our experiences in South Africa. Before we move forward, let us also keep in mind that South Africa, different to many other countries in sub-Saharan Africa, has a very small, minute Muslim population. The Muslim population in South Africa is between 2 to 4%, not more than 5% of the total population in South Africa. But Alhamdulillah, I think from an Islamic banking, Islamic finance perspective, we have achieved quite a bit. The first most important theme we need to talk about is that of trust. If we want to empower an economy, if we want to create new structures, we need to have trust. And when I say trust, we need to have trust in the system, in the existing system, and we need to have trust in the system that we want to put in place. If the people around that system do not have trust in that system, then unfortunately, it will be very difficult to start from there. We have to go back and instill trust into something before we can achieve our objective. Now, if you go to the example of the Prophet Muhammad sallallahu alaihi wasallam, may peace be upon him, before he came up and introduced himself to the people as the Prophet and the messenger of the Almighty Allah subhanahu wa ta'ala, he already gained the title of Al-Amin and the trusted one. People knew him as the person who they could trust, and irrespective of whether it was a business matter or a religious matter or any other matter, if he said something, if he did something, it was already considered a person of trust, a person that when he speaks, he will be truthful. When he does something, he will be truthful, etc. So from that particular aspect, we need trust in the system. If the financial system around us is one that we can trust, then it's easy for us to build on that. If the financial and existing system is not trusted, then we need to go back to basics. We need to build trust around that system, and we build Islamic banking and Islamic finance structures on a system that is trusted. Then we're building the basics, and we're building the foundation of Islamic finance structures on a system that will last forever. The regulatory framework must be trusted. In South Africa, we have what we like to refer to as world-class system when it comes to the banking and regulatory environment. And I think from that perspective, it made it very easy for us to achieve some of what we try to achieve in the Islamic finance world. In 2014, when the government launched the first sukuk, it was a dollar-based sukuk. It was not for South Africans, it was for foreigners to invest into South Africa. And when the people from the treasury went on their roadshow, they raised the money very, very quickly. And the reason for that was because besides the Islamic system that we are trying to create, the system that we're embedding the Islamic system onto was already a trusted system at the time. The people, we need to invest in people. The people in the system should be knowledgeable and should have depth, just not cursory information, cursory knowledge. Google search today, we can search so many things. We have AI, we have all become experts in something. The most difficult part today is just to know how to ask the question. Once you know how to ask the question, you can get the answers. That's not what I'm talking about. I'm talking about investing in people with skill, people with knowledge, people with in-depth knowledge on particular matters. When it comes to scholars as well, from a scholarly perspective, we go through various learnings. And in our learnings, we learn Islamic commercial law. So a person could have spent many years learning Islam and the religion of Islam, but maybe he focused in the area of tafsir and did not focus in the area of Islamic commercial law or jurisprudence or fiqh. Then he will not be a subject matter expert on Islamic commercial law. So we need to invest in people. We need to invest in people to take this concept forward. We need to expose the people that will take this concept forward to other environments. We need to expose them to other jurisdictions outside of sub-Saharan Africa to see what is going on. How do the other jurisdictions do this? And like that, we create wealth of people and wealth of knowledge. Now, when we want to empower an economy, there's two parts and two important parts. The first is to raise the capital, and the second is to deploy that capital in the appropriate avenues. So when it comes to raising of capital, governments may raise capital. Governments may raise capital in the form of sukuk. Now, I'm not going to talk today about sukuk. I'm sure you have had many sessions, and including this session, you will talk about sukuk. What is a sukuk? How is it's just for if you don't know, and so that you can follow me, it's an Islamic bond or an Islamic instrument that can raise capital and deploy capital in a particular avenue. So what I'm talking today about is about a different type of sukuk, or I want to talk of a different type of sukuk that we don't generally hear about, but can be used to develop economies and can be used to develop communities. So if the government system is trusted and the raising of capital in the government space is trusted, then we can issue sukuk in that space, and we know that the sukuk money that is raised will be deployed correctly. If you look at the Islamic banking system as well, on a private level, on a local level, if Islamic banks are trusted, in South Africa, when we talk of Islamic banking, then unfortunately we always go back to our very first experience of the failed Islamic bank in South Africa that went into liquidation, and many people lost money. And it was the first attempt of Islamic banking. So some people till today think that it is the system that failed. Unfortunately, it was not the system that failed. Fortunately, it was not the system that failed. It was the people that failed the system. It was the trust that I'm talking about. We did not have people of trust in the correct space, and therefore it failed. But after that, because Islamic banking started in places of trust and people embraced the system, then it created the avenues and the channel for Islamic banking to enter the space of banking. And Islamic banking has grown significantly in South Africa. Um, we have all the big banks in South Africa offering Islamic banking windows. And what we managed to get right in South Africa was to get the rate right. So generally people would say, yeah, because I'm investing in Islamic banking, my rate is less than what I would have gotten in a conventional bank. Now, obviously, from a Muslim person perspective, earning interest is of no value to you. You cannot benefit from interest. Getting involved in the transaction is problematic from an Islamic perspective. It is sinful, etc. So whatever rate you earn from an Islamic bank is better, even if it's uh, anything above zero is better than what you would have earned in or supposedly earn in an interest-bearing system. However, people will still make that comparison. People would always want to know, why is Islamic banking charging you more when it comes to financing? Why is Islamic banking giving you less returns when it comes to investing, etc.? So we managed to get this right in South Africa, alhamdulillah, where Islamic banks have achieved the place of trust, and Islamic banks provide you very similar rates, and in some cases even better rates than what you can get in the conventional space. I'd like to talk about the sukuk that was launched about 2 or 3 years ago in South Africa on the Johannesburg Stock Exchange. It was launched in the agriculture or for the agricultural sector, or rather to benefit the agricultural sector. So it's an instrument, it is sukuk, it is listed on the South African exchange, a 10 billion rand agrarious or agri-based sukuk. It was listed, it has Sharia certification. The community or many people have invested in the sukuk, so it raised the money it required to raise for the first tranche, and now it is going into the second tranche. But when we look at the purpose of the sukuk, who are the main beneficiaries of the sukuk? So whoever invested money knowing that there will be some sort of return. But the investors into that sukuk, the people that bought that note, are not all Muslim people, number one. Number two, the people that are taking funding from that system, they are not Muslim people, or many of them are not Muslim people. It is structures that are Sharia compliant, signed off as Sharia compliant. The processes are Sharia compliant, but it is used in the agri sector. So if a person in the agri sector needs to develop his farm, needs to develop his produce, then in that particular space, he has access to funding, but the funding is through Sharia compliant means and Sharia compliant avenues. So for example, we have implemented a Salam transaction in that space. So we have the sukuk listed on the South African, the Johannesburg Stock Exchange, and the sukuk issues funding to people in the form of a Salam transaction. Now, a Salam transaction is something you'll not hear of it much, but it was there in the time of the Prophet sallallahu alaihi wasallam. The people of Medina were farmers. When the Prophet ﷺ came to Medina, he inquired about how the farming is done, and he said, this is not the way you do it, and you should do it in a different manner. And he taught us the manner of salam. So salam is when you provide funding to a farmer, you provide him funding up front, and then he will do his farming, and he will provide you the crop at a later point in time. So this is a particular funding structure that was advised by the Prophet ﷺ, and we are using it in South Africa to benefit farmers. And the farmers that are using the structure, many of them are not from the Islamic faith, but have seen the benefit of the structure. And obviously, when the farmers benefit, then the local communities and everybody else would benefit from that, because farming then extends when a crop is produced, then it benefits the entire community. The other item I wanted to quickly talk about today was waqf. Waqf is an Islamic endowment WAQF, spelled in English, Waqf. It is an Islamic endowment. It is an Islamic concept. It is placing the property in the guardianship of the Almighty Allah subhanahu wa ta'ala. So you remove ownership of a particular asset out of an individual or out of a corporate, out of a out of a private ownership, and you're placing it in the ownership of the Almighty. What this means that that particular item will not be sold, it will not be inherited, it will not be gifted, it will remain forever. So one of the conditions of waqf is that of ta'bid. Ta'bid means to remain forever. So we know, and the most common type of waqf which we have almost in every place of the world today is that of a masjid, a place of salah where we go and perform salah. The land is waqf, it will not be sold, it will remain a masjid forever. That is the very nature of a waqf. But it does not mean that waqf is limited and can only be used for places of worship and only for religious purposes, but we can use the same concept of waqf into the Islamic finance field. And that's what I want to talk to in a few minutes that I have left. When we create the waqf, we take an asset, we place it in in the ownership of the Almighty. And in some places of the world, we have something called the Waqf Act. So then the structure or the legal structure that will carry that item or those assets will be through the Waqf Act of that country. However, in countries where we do not have a Waqf Act, like for example, South Africa, there's no Waqf Act. So we need to find a legal vehicle that could carry that waqf. And one of it is a trust. So we create a trust in the modern sense or the conventional sense of the word, but that trust is then housed and drafted in a particular way so that it carries the Islamic concept of a waqf. And the item then placed in waqf remains forever and for the benefit of whoever the waqf has been formed for. So the Sharia has given the waqif. The waqif is the person who creates the waqf or creates the trust, has given him very wide allowances. Shartul waqif kanas shari'. The fuqaha and the scholars have mentioned that the conditions that the waqif and the founder of the waqf, the conditions that he places when creating the waqf, kanas shari', it will be upheld like the text of the Quran and the Hadith. That means you will uphold the text, obviously, unless if it is asking you to do something incorrect, for example, riba, etc., then you will not uphold the text, or you will not uphold the conditions of the founder of the waqf. So let's take an example. A particular person takes a piece of land, or he takes a house, a fixed building. He says from today onwards, this item becomes waqf. He does the registration process and he hands it over to the people who will be looking after the waqf. Then from there on, that item is now, or that property is no longer in his possession. He loses possession, it goes into the waqf, but the rewards of that he will attain forever as long as somebody is benefiting from that waqf. Then that waqf could be used to produce income. The income would be used, it could be used for many purposes. It could be used, for example, as donations for education, for orphans, for uplifting communities, etc. The income could be used now, what we would like to talk about today, you could create a waqf, and the purpose of creating that waqf is to assist the Islamic finance industry. What I mean by that, we create the waqf. The waqf, for example, in South Africa, we have takaful, which is the alternative, the Islamic alternative to conventional insurance. We have takaful in South Africa, which is based on the concept of waqf. So created a waqf, then people contribute. When you're making your monthly contributions, like how you have a payment of premium in a conventional sense, in the Islamic sense, we have the payment of a contribution. The contribution is made to the waqf. So the insurance company that has the insurance license, looks after the waqf and follows the rules of the waqf. They do not own the monies that are contributed, it is owned by the waqf. They are there on a contract basis. The insurance company is contracted to the waqf to do certain items on behalf of the waqf, and that is to make sure the contributions are received, there's no fraud, the claims are received correctly. When a claim is made, it is made in accordance with the rules of the waqf, etc. So, for example, if it is a short-term insurance kind of structure, then a person's motor vehicle meets up in an accident, the insurance company is paid to make sure that it is a claimable event, and if it is, it also is paid to make sure that the beneficiary of the waqf, being the contributor and the participant, is or does receive his or her benefit, which is the payment from the waqf, so that they can fix the car, just as an example. So the concept of waqf could be used in many avenues. Takaful is just one avenue. Another avenue, which I would like to talk about in the next few minutes, is the waqf of nuqud, of cash. Now, if you look at fiqh from a classical perspective, you'll find there are many discussions, and scholars have discussed whether we can or cannot accept cash as waqf. Why? Because cash cannot benefit somebody without it being reinvested or without it being consumed. Now, we just learned earlier on, from a waqf perspective, there has to be continuation, there has to be ta'bid, it has to last forever. So how would cash last forever? However, the latter day scholars have allowed it, and they have said that you can take cash, you can put it into you can make it as a waqf, it will last forever. How? By investing it. So the cash that is made waqf, that cash is invested, and the proceeds and the income earned from that investment would be used on the beneficiaries of the waqf. Now, when we create this waqf, the waqf then is a legal entity. It can sue, it can be sued, it can accept donations, it can accept contributions, it can give out loans, etc. Now, this becomes something which communities can benefit, especially communities in sub-Saharan Africa, where we have these vast disparity between the very, very wealthy and the very, very poor and needy people. The wealthy people are always looking, alhamdulillah, for avenues to create, to gain reward. They could create these waqf structures, and the waqf structures could be used in communities to develop the community. So you create the waqf, then you contribute, people contribute to the waqf. Now, the contribution of the waqf, there's a fiqh technicality here. When you contribute to the waqf, then that item could be used for the beneficiaries of the waqf, as it is the condition of ta'bid, and the condition of continuity does not sit in that space of contributions that are received by the waqf. So just to make this concept easy, we know a masjid is waqf, but people contribute to the masjid. Why? Because there is expenses. You need to pay for water and lights, you need to pay for salaries, etc., etc. There are many expenses in a masjid. So people contribute. Now that contribution is received by the waqf as a contribution and a donation. It is not necessarily waqf. So when you're giving money to the masjid, to build the masjid, then that becomes waqf. But when you're contributing to the masjid, it is a contribution and a donation that the waqf receives and is used to spend on the beneficiaries of the waqf. So we create the waqf, and then we can contribute to that waqf. The contributions to the waqf can come in the form of loans, it can come in the form of contributions and gifts, it can come in the form of investment income, etc. But the waqf is then formed for the empowerment of a particular community, whether it is a farming community, whether it is a community living in a town that we need to create education and infrastructure for education, etc. Whatever we need to do, we can use a waqf as a concept, and then that concept will benefit the founder of the waqf forever, because he will receive the rewards as long as somebody benefits from that. We know the waqf of Uthman bin Affan radiallahu anhu, which was established when the people, the Sahaba, migrated with the Prophet sallallahu alaihi wasallam from Makkah Mukarramah to Medina Munawwara, and they were in need of water. Then the well, which is very famous, a very famous incident, Ruma, the Prophet sallallahu alaihi wasallam asked for contributions, and that well was donated by or bought and purchased by Uthman bin Affan radiallahu anhu, and it was made waqf for the Muslims to benefit from. The Muslims had then clean water to sustain themselves, for farming and for various activities. And I was just reading recently that the current Saudi government till today has recognized that waqf, and that waqf is still used up to this very, very day. So with that, I just want to mention one last thing, and that is
Thank
a
you.
Qard
Thank you,
Hasan
Sheikh.
fund.
We have limited time. If you can just wind up in 1 minute, Sheikh.
Sure.
So
Then from a work perspective, I think that is it. And we have some documents that Sheikh Khalfan I can share with you that can be used as a template if anybody is interested to create waqf and to use waqf as a strategy for empowering the communities in sub-Saharan Africa and around the globe as well. Jazakumullah khairan. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa barakatuh. Thank you so much. Thank you for these wonderful insights, and I believe it informs and basically motivate us to go and read and engage and learn deeper on these topics. As you know, participants, we can do justice for these topics given the allocated time, but please note down these ideas, these insights that are shared for you now to be able to engage further with scholars, engage with literatures, in order to educate ourselves on these varieties of instrument aspects that can be used to empower the community and society at large. That being said, I would like to thank you again, Mufti Ahmed Suleiman, for making time despite your tight schedule. We really appreciate, and we will excuse you to be able to proceed with your other engagement. That being said, we come to the last speaker, which is Mr. Abdullahi Adan. Mr. Abdullahi, are you there? Mr. Abdullahi?
Khalfan, yes, I'm here.
Okay, mashallah. All right, so Mr. Abdullahi will just share with us briefly. I think he might take 10 to 15 minutes to share about the topic that what we have that reads as Islamic investment banking, a new solution for capital raising and wealth management. As you know, most of the people have known commercial banks, but this Islamic banking is very new. I hope, Abdullah, within these few minutes, you can demystify what investment bank does and what SIB Najah has to offer as a case study with respect to empowering the economy through Islamic finance. Just to introduce Mr. Abdullah, he is a very experienced and seasonal banker. He has worked with many banks in Kenya as well as outside of Kenya. And currently, he is the executive director for the Islamic Investment Banking Division of Standard Investment Bank. Without taking much time, you are most welcome.
Thank you very much, Khalfan, and assalamu alaikum wa rahmatullahi wa barakatuh to the rest of the guests.
Wa alaikum assalam.
Shukran. Good. It's very good to be part of this discussion today, and actually excited to hear some of the other speakers talk about some different areas related to the Islamic finance. As Khalfan said, we operate in Kenya, and we are actually the first fully fledged Islamic investment banking division that was set up in Kenya. We are a regulated entity by the Capital Markets Authority of Kenya. As you're aware, in Kenya, the Islamic finance landscape has actually been there for a while now. From actually the beginning of the commercial Islamic commercial banks started in 2007, 2008. Later on, we got the Islamic Takaful or Islamic insurance that actually started close to that time as well, where we have one fully fledged company called Takaful Africa. Later on, we had actually quite a number of other, areas being developed, especially on the SACCO side, and where we have quite a number of fully fledged Islamic or Sharia compliant SACCOs. Later on, we had the development of the windows by both, of course, the conventional commercial banks who actually started providing Islamic banking solutions, and also for the SACCOs. Then we came through, again, around 2020, the onset on Islamic microfinance institutions actually also starting. And we started now a journey in 2023, actually, to set up the first fully fledged Islamic investment banking division in the country, where we were actually licensed by the Capital Markets Authority around June of that year. If you are aware, the Capital Markets Authority of Kenya had actually implemented the Islamic Capital Markets Act in the country around 2017, 2018, which actually made it possible for players like ourselves now to come into the capital markets market in Kenya. We are offering 4 key areas within the Islamic investment banking division of the Standard Investment Bank. And majorly, one, of course, is the equity trading, where we provide stock brokerage services for investors to access the equity markets, both, of course, the local and also the global markets. And some of the things from a Sharia compliance perspective that we do for now our investors or the potential Muslim investors or ethical investors who are looking for ethical, solutions, we normally do have a screening mechanisms within the organization where we screen the different markets in Kenya, in the region, and also across the globe. And we advise our potential investors of which counters or equities are compliant or halal for them to be able to invest. And we have the capacity to be able to help them, take up the investment, buy the necessary equities or stocks that they need, hold it for them throughout the life of that investment. And also, as they exit, we help them with, during this period of holding, what basically we do also is to monitor the specific equities or stocks that the customers have bought or the investors have bought or ourselves have invested in, whether they are still maintaining the compliance threshold from a Sharia perspective, in line with the guidelines given by the AUFI standards, which actually mainly what we utilize in Standard Investment Bank, and to make sure that within the life of that investment, it's maintaining its purity or the necessary thresholds for compliance perspective. And also, when the investor is exiting, what we help them with now is also to help them do the necessary purifications for any impurities in the specific investment that they have done in that particular period. And we help them do all the necessary purifications to make sure that the investor at the end of the day takes out what is purely halal and that has been purified where necessary for equities or stocks that have actually probably had some thresholds of impurities within them. And under the AUFI guidelines, the thresholds that actually currently we adopted at the Standard Investment Bank is 5%. Anything below 5% is what actually we are using as a threshold for allowable investment into any equity or sukuks that have any impurities within them. So other than equity trading, we at Standard Investment Bank, we also do fixed income trading. We are majorly focusing now on the sukuks or Islamic bonds, where we help, of course, our potential investors, both institutional and individuals, access the sukuk markets, both, of course, within the region and also in all the major markets across the globe. And we are able to help an investor buy a sukuk, hold it again throughout the investment period, as I had also mentioned earlier, monitor it for any compliancy perspective in terms of the Sharia, and also when they're exiting, help them liquidate or exit that particular asset. And If there are any purifications that also needs to be done, we also help them in doing the purification. So we also do fixed income trading. One of actually the reason why actually we did this fixed income trading as well from an Islamic, from a Sharia compliant perspective, is that one of the biggest challenges actually the market, Islamic finance market in Kenya was facing is, especially for the commercial banks who actually were ahead of us and who actually have developed quite well, were having difficulties in managing their liquidities because they cannot participate in the normal fixed income market, where they couldn't access the government treasury bonds or the euro bonds and those kind of things. So you'll find the Islamic banks were quite limited in terms of the liquidity management tools that were at their disposal. So bringing in such a solution into the market is also now helping those other developed Islamic institutions in the market, where now we can come in and help them access those markets and buy them within the regulatory framework, do Sharia compliant fixed income trading, and also for the SACCOs and any other Islamic institution or investor who is looking for that kind of an investment or an asset class specific investment. The third thing also we do within the SIB Najah, which is the Islamic banking division of Standard Investment Bank, is we do what we call the corporate advisory services, which I think is probably one of the areas I'll expound a bit on, being the subject of discussion for today. We do corporate advisory services within the Standard Investment Bank Islamic division, where we help entities, both private and semi-government institutions, raise capital from the market. And we do it now from a Sharia compliance perspective. Standard Investment Bank is actually one of the leading, transaction advisors actually in the country, where the bank actually globally has undertaken more than close to 300 billion Kenya shillings in capital raising in the Kenyan market. And actually, the bank had participated now over almost all the major public issues that were actually happening in the market. Starting from the Safaricom to Kengen, which was actually the largest fund or capital raised in the Kenyan market of about 28.6 billion shillings in 2016. So we came into the market now to do the same, and now but helping Islamic institutions or ethical institutions now raise capital within the guidelines or the confines of the Sharia. So we at Standard Investment Bank have the capacity to be able to help institutions raise funds from the market. And one of the ways actually we are currently doing it is, of course, we have a fund within the bank, which I'll talk to it later, under our wealth creation or wealth management. And whenever we have transactions like that in the market, we are able now to do that bridging between the institution, where we also feel that within our fund we have the capacity, or the specific transaction that we're undertaking has the capacity or the potential to be able to give us a good return for our investors. We actually become also sometimes the investors that invest in that particular capital raising, where we find probably the requirement is much more than what we have. Is also now we lay it out to the other Sharia investors who are looking for a Sharia compliant investments. As I had mentioned earlier, one of the biggest challenges actually the Islamic institutions in the country were facing is that bridge in terms of whether institutions or structures that are compliant, where they could be able to deploy their additional excess liquidities, whether Islamic banks, the SACCOs, or any other potential investors who are looking for a Sharia compliant investment. And we have actually currently undertaken within the Sharia space quite a number of transactions where we've actually raised capital for quite a number of projects. Of course, we are still on our early stages. Actually, we're just in operation for now 2 years. We have so far undertaken a few projects. We are also working on a few more projects. So it's a space of the world, and actually what we have now to make sure that the same is expanded. One of the other areas actually also within the capital raising that actually we're looking at and actively engaging is on the government. We're working closely with the Ministry of Finance in Kenya, where we're pushing for the issuance of now sovereign sukuks in the market, where the government could also as part of the infrastructure, capital raising or fundraising that the government is doing, can it be done within the Islamic structure and issue sukuks? We are actually getting a very good inroads on that, and hopefully, with the directives given by the president and quite a number of senior treasury guys in the country, is actually we're heading where we're pushing the government, to see a scenario where when the government wants to raise its budget, where can 20% of the fundraising by the government be done within the Islamic structure, so that we see how we can, make the Muslim population or ethical investors, both of course locally and globally, participate in the government, lending. And hopefully we're looking forward to probably in the next a year or two or so, where the government will allocate 20% of its fundraising to be done within the ethical structure, and where sukuks will be issued by the government of Kenya to raise now capital from the market. And actually that's going to be hopefully a big step and a huge milestone that will have been achieved by the Islamic finance sector, and thereby actually opening up now more opportunity for liquidity management and investment to now also the commercial banks and all other Islamic finance institutions that actually are operating in the country. So those are some of the developments that actually we're pushing for, and quite a number of projects actually now are on the pipeline, and the awareness has been created in the market in terms of that they can be able to raise funds from a Sharia compliant perspective. So it's an area that actually we're still on its development stage, and we're really pushing and working with the relevant industry players to make sure that section of the market is developed and progressed. The other offering that we do within the Standard Investment Bank Islamic Banking Division is a wealth management product, where we have created actually the first of its kind in the market, the first Sharia compliant fund in Kenya. We call it Mansa X Sharia Fund. These are two funds that are operated both in Kenya shillings and dollar. So we have the funds available in both Kenya shillings and dollar, where potentially both institutional and individual investors can be able to invest in the fund, where we are currently have about 9 different asset classes where the fund is investing in, and we invest them across the major markets in the globe. And the return that we make from those investments is what we pass on back to our investors. It's a global fund, which means our investment happens in all the major markets across the globe. We're not only limited to Kenyan market. So at any given time, we have investments across 3 or 4 different, jurisdictions. Sometimes as high as as high as 7 markets where we invest in. This fund is actually first of its kind in the Kenyan market. That of course is compliant from a Sharia perspective, and we are open for basically encouraging individual and institutional investors to invest in the fund. And one of the other big areas within the wealth creation that actually we have now opened up and we're really working hard also with the government institutions now is the pension industry. After setting up the Islamic Investment Bank, we went ahead again and applied for another license to be regulated by the Retirement Benefits Authority of Kenya to be able to manage pension funds and pension schemes in the market. As you are aware, the pension industry of Kenyan market, actually one of the biggest in the region, has never had any Sharia compliant, management or investment opportunity for the longest time. Now, with our coming into the market actually and us going into that sector, we're trying to bring, because the Kenyan Muslim population currently is estimated to be about 15 to 20% of the population, which means even from the government employees to all the private sector, you'll probably, even if you say 20 to 15% of the same employees actually are Muslims in correspondence with the overall population of the country. So you'll find the Muslim community have been working over the years, their pension accumulated and invested in the wrong ways or in a non-compliant vehicles or investments. So it's an area that actually we have started the last year, and it's coming up very well. And we have started specifically now with the private sector, employees who have actually started moving their pensions to us. We are also working very closely with the government, pension schemes, who now we're pushing them, and actually some of them at advanced stages in creating parallel schemes within the main scheme that allows the Muslim employees within those institutions be able to move their schemes to now the Sharia compliant schemes, where we'll be able to provide them with the management services that now make sure that the investment is done in line with the Sharia, and that at the end of the day, the investor or the pensioner is getting something halal at the end of his retirement period. So the industry is quite still at its infancy stage. We are, as I had mentioned, just now starting our third year now. We've just fully completed 2 years, and alhamdulillah, it's been the growth has been very very good, and we are hoping and actually seeing quite a number of interest actually of other players now coming in and trying to open now similar funds and similar services that are compliant from a Sharia perspective. Quite a number of the other investment banks have actually started also now opening windows within their institutions, or opening funds that are now being managed in the Sharia compliance manner. So it's a huge industry where, of course, from a compliance perspective, has not been exploited before. But with our entry into the market, we are seeing a good traction and interest from the other players in terms of bringing Sharia compliant solutions into the market. And we are hoping to push this, of course, drive to also the rest of the region, whether it's in Tanzania, Uganda, Ethiopia, and hopefully to the larger East African countries, inshallah, as we progress. And hopefully it's going to be also a learning lesson for them to see what has actually we have done and the experience that we have gone through in the Kenyan market in setting up the Sharia compliant investment banking solutions or wealth management, and also capital raising in line with the Sharia principles. We are very hopeful that as the industry is growing holistically on all the other sides, whether it's from the commercial banking perspective, we will be able to complement and complete the ecosystem to make sure that all the players now have at least the opportunity to complement each other and provide the services, full range services across the different segments of the market. I think I'll stop it at that, Khalfan. Thank you very much, and Jazakumullahu khair.
Thank you. Thank you so much, Abdullah, for taking us through what the investment banking is doing with several case studies of what SIB, Islamic Investment Banking Division, SIB Najah is doing. Just to highlight, in Kenya, he mentioned one of the key player within the ecosystem, the pension funds. And I believe there's a lot to learn in Kenya from Tanzania and from Uganda and other places, because we are yet in Tanzania and Uganda, we are yet to introduce Islamic pension products. And of course, the reasons because of different systems that are operating between these countries. In Kenya, you have multiple kind of structures for pension schemes, whereas in these other countries, like Tanzania, you have kind of a controlled government-owned entities that are only allowed to administer and manage this. So within the same framework in Tanzania and so on, I believe there's much that can be introduced, like Islamic windows within the NSSF, PSSSF, and also for the ZSSF. Gladly, very recently, we had in Zanzibar Social Security Fund has introduced the window through the launch by His Excellency, the President of Zanzibar, Dr. Hussein Mwinyi, and I hope that becomes an opening to push and also enable people to be able to save for their retirement in according to their faith. And this is a kind of empowering, because whatever income that now will be going through their pensions, they can enjoy it comfortably without any doubts or suspicions of it being commingled or mixed with the interest income, which so far constitute more than 60% of what these funds generate. Now in Kenya, the landscape, there's a lot to learn. The landscape is quite different. They have opened this many years ago, and even corporates themselves can set up their own staff schemes that will be managed by fund managers, among other players, in order to maximize the returns, but also align with the faith of the sponsors or the promoter. Thank you, Abdullah. I can't say much given the time. Just to appreciate you making time to share with us on what investment banking is doing, and that is aligned with empowering the people and the economy within Kenya, but in East Africa. Most of these services that Abdullah mentioned are available not only in Kenya, it is available regionally and even globally. And anybody, East Africa or outside Africa, can be able to access these services that are offered by SIB, particularly the Mansa X Sharia Fund. So reach out, find out more information for you to see how it can be empowering either to you or to your business and so on. Dear participants, we have come to an end of this forum. I believe there is a lot of takeaways that we have noted down, and I believe there is a lot of knowledge that has been shared, insights that have been shared, which is now upon us to go back and see how some of these ideas can be taken to actions. Some of these takeaways can be considered in our processes, in our innovation, in our transformation, in our empowerment initiatives, so that we are able to empower our people and move forward and develop their businesses as well as their economy. That being said, I take this moment finally to appreciate all of you who have joined us to present since morning, from our guest speaker, Mr. Fahad Hamid, to the practitioners and academicians and the shuyukh that have shared with us tremendously. We appreciate all of you for sharing your thoughts and for being with us from the beginning till this time. I also like to thank you, the participants who have made time from 9:15 to be with us, to listen to us, and get some insights and ideas and take away from today's discussion. The presentation for this session, inshallah, whatever that has been presented, we shall gather from the speakers and share to you through your emails that you had used to register for this forum. And also a recorded version of this forum will be posted on YouTube on the Abrar Consult page. We have a page called the Abrar Consult YouTube page. The recording will be posted there once it is ready. That being said, thank you so much once again for being with us, and we look forward to see you again in the upcoming forum next year, inshallah ta'ala. Subhanak Allahumma bihamdik, ashhadu an la ilaha illa anta, nastaghfiruka wa natubu ilaik, and thank you so much, and bye-bye for now. Ma'as salam.